Morning, morning. Hello. Sorry, microphone wasn't working. How are you all doing? Morning, everybody. It's always the way, isn't it? I was sitting here talking, and it wasn't working. I wonder why it wasn't. Anyway, don't matter. Morning, everybody. It's Monday morning. Morning, Danny. Morning, Mark. Morning, Paul, Chris, Peter. God, there's a lot of people here this morning. Morning, Elevated Trading Hub. Dennis, Robert, Thimba, Ismet, Joe. How are we all doing? Oh my God, and there's more. Andrew, Sol, Barry. How are we doing? Right, so it's Monday. New week. Putting all the way down there. Don't know. So today is the only stream I'm doing this week. Morning, Vitali, Silent, Monkey, Marco. I'm going to take this week off basically to get stuff done. I've got so much stuff. I've got an absolute list as long as your arm of things I need to get done with the position trader EA, with the stock index hedge EA. I've got this strategy that is basically paying every bill at the minute, which I really need to focus on because this is making an absolute fortune, this thing. So I need to focus on that at the moment because with the volatility, this thing's really killing it. And I really want to get that fine-tuned and proper robustness testing done on it. So I need days of time where I'm just focused and in the zone for 8 hours a day. So I'm going to take the rest of this week off and basically, well, not going to take it off. I'm going to take it off of streams, but I'm going to be working on the website, on the EAs, and on that strategy as well. So that's my plan this week. So I thought I'll do a live stream Monday today, which means we can go through an analysis of what's coming up this week, have a look at what's happened over the weekend, and obviously have a look at FX movements and things. There's some other bits and pieces I want to do in the position trader EA to do with the average weekly range as well. I want to try and get AWR included in there. I want to get the ADR indicator upgraded to include ADR. So there's just tons and tons and tons. I've got this list, and every day I seem to add something to the list, but I never seem to take anything off of it because I just don't get time to do anything. So that's what I'm doing this week. So start off with this morning, we will go through the news, have a look at how the ORBs go, and see what happens today. Morning, Mumo. How can I see ADR numbers with ORB V3? Stick the ADR indicator on your chart. Like you just had on the screen. So this is the ADR indicator. Yeah, so this shows ADR. This doesn't. It doesn't have ADR on there. Oh, you mean this? This. What, that? That's a development version. That's not. That's just for development. You don't need to see ADR numbers. Doesn't matter. And if you do, you can just get an indicator, I guess. Right. No 5-minute breaks on the DAX or the Dow this morning. Right, let's go over the news to start off with. So today is Monday. It's PMI day. All the PMIs are coming out this afternoon and this morning, so it's going to be a busy day potentially. The Purchasing Managers Index feeds into Consumer Price Index, which feeds into inflation, which obviously feeds into, that is inflation, which feeds into your interest rates, which is obviously what drives the market up and down. So today we've got all of these coming out for the major pairs. So 8:15 this morning, which is obviously in 10 minutes time, we've got the Euro coming out, which is the French, and then the German at 8:30. So once these two are out, we have a combined view of what sort of 80% of the PMI is going to be for the Eurozone, which is why that is orange, because it's made up basically of those two. So 8:30 will have a good indication of what's happening with the PMIs. So potentially some decent movement coming this morning on the Euro. Pound is at 9:30, and then we've got the US at 1:45 this afternoon. So this is also 15 minutes after the New York Open. So whenever you have a news event coming just after market open within sort of half an hour, you quite often get contracted ranges. which is basically the market waiting for these numbers to come in to see whether or not it needs to start buying the stocks now or wait for the stocks to become cheaper as PMI drops the currency. So that we'll have to wait and see what happens this morning and this afternoon, but quite often these ranges are fairly tight, and this is one of the beautiful advantages of the new ORB mechanism for deciding on what is and isn't a good range. If this just goes like this morning and these ranges are very tight and tiny, we don't trade, because there's a much higher probability of being stopped out if you've got a choppy open, obviously. So we're looking for momentum breakouts. So if we don't get anything after the 5, the 10 or the 15-minute range, that's fine. We'll wait for the 30-minute range to form, which encompasses news, and then we'll take a break of that. So when the market knows what it needs to do, we'll take a break of the 30-minute, which is called the initial TPO. So that's basically how the SIH works, obviously, at the moment. So unless you're taking pre-markets, obviously, in which case there is a decent pre-market range today. So, and again, I'm going to be working on all this week. So DAX and FTSE both broken long, but we'll see what happens with that this morning. So that's today's news. We've got Bailey speaking later on today as well. Let's just see where that is. University of Leicester Chancellor's Distinguished Lecture Series. Audience questions expected. Unlikely he's going to it's the press releases where he tends to say something important, not audience participation, but you never know. So be aware of that this afternoon. This evening. Tomorrow, no news. It's all orange tomorrow. We got Richmond, which can sometimes move it, but and obviously consumer confidence can sometimes, but other than that, there's no news tomorrow. Wednesday is the main kind of focal point this week for news, which is the CPIs. So we've got the Australian CPI. Don't know why there's no forecast on that one. It's yearly, isn't it? Yeah, so it'll probably be 2.5 stroke 2.6. And then we've got the pound as well, which is forecast to be 2.9. Now, I don't think that is necessarily going to happen. We'll have to wait and see. So 7 o'clock Wednesday morning, we've got potential movement on the pound. Be aware, obviously, the FTSE will have done a lot of movement before the open on Wednesday. We've got the budget as well on Wednesday. The budget is an absolute anomaly. Remember Liz Truss? Yeah. Remember the collapse? This is what can happen. Rachel Reeves might come out and say something which basically completely destroys the faith in the UK economy moving forward. And we may have a collapse. We may not. We've no idea. So just be aware of this. Get as flat as you can before it, basically. It comes out typically 12:30. So just try and get flat as much as possible on any pound pairs you've got, or protect it, basically, just in case. Yeah, I mean, it's so rare that we get those massive moves, but remember Liz Truss. Yeah, it happens. You can't get away from it. It is something that happens. Where is she? There she is. Good old Liz. Cheers, Liz. And Kwasi Kwarteng, obviously. So, yeah, 2 days, basically. ADR at the time was probably somewhere around 143. Within 2 days, we'd moved 961. So 10 ADR in 48 hours, basically. Boom. Bailey will always step in and bail us out because he has to. You can't just let your economy collapse. But obviously just be aware that occasionally on budgets and monetary policy shifts, basically, which is what it is, you tend to find something going wrong. Thursday, we've got GDP and unemployment claims for the US. So that's the first proper mover this week for the US, apart from PMIs today. And then we've got retail sales for the pound. Again, retail sales does have a big impact at the moment. And then we've got CAD GDP and PC on Friday. So it's not a particularly exciting week for news. Today is probably the biggest day, so we could kickstart some nice trends off today. But that is your main focal point on Wednesday. CPI obviously is the second most important news event that we have. And obviously budgets are outliers on their own as being very important, depending on what's said. But if it's all business as usual, then nothing happens, obviously. So it's just a case of waiting and seeing. Weekend-wise, nothing much. We will not rule out the possibility of selling Bank of Japan government bond holdings. Ooh. No ADRs so far today, so that could potentially be bullish for the yen. So everything down against the yen. When was that? 620 this morning. So that's this movement we've just seen here. Obviously bullish for the yen, but potentially, yeah, it's all this. We might do this. It could happen. Doesn't mean anything really. Got 3 minutes to the news. Other than that, over the weekend, there wasn't really anything exciting. Trump was radio silent this weekend. We've had some news out of Canada, but yeah, Trump said stuff, but nothing exciting. So it seems that we've had a focus shift. And this is probably something political, but we've moved away from tariffs onto let's blow Iran up because I've screwed up the economy. Elon's about to go bankrupt. So let's focus on starting a war because war's really good for oil prices. And we got loads of that. So it looks like there's a shift in, what he's doing. He's got his finger in every pie and he's got every single one of them wrong. So we'll see what happens. But there was nothing over the weekend. Hence, obviously, this morning we've woken up to no real ADR movement, which is good. So nothing else to report there. Aussie New Zealand is an ADR hit to the upside today. So we've got a little bit of New Zealand weakness again. It's funny. I was chatting to someone yesterday. We sold a chair. That's not the news. We did sell a chair at the weekend, and the guy that came to get it was a New Zealander who's just come over from New Zealand because his wife's over here doing medicine and stuff, doctor. And he was telling us how bad it is in New Zealand at the moment and how their economy is absolutely on its knees. And it's interesting listening to what he was saying and his view on how it's going in New Zealand. If you look at this back in September, yeah, that basically is New Zealand dollar on its arse. And he said there's absolutely nothing going for it. Tourism has stopped. The economy is stopped. His currency is worthless. Houses are collapsing price-wise. It's there. He said, they're in an absolute mess over in New Zealand at the moment. So, Aussie New Zealand really at the minute. He said they are, they're the same thing basically, but bullish on that. So lovely buy opportunity at the moment on the Aussie New Zealand today. It's interesting just talking to people that actually live in these countries because you don't really get that view on news feeds and things. So anyway, so there you go. Aussie New Zealand's your ADR today. So there's a reversal opportunity there. Drop down M5, M15, reversal alert. You've had it already at just shy 125 ADR. Beautiful 3-bar reversal. So whether you're taking a reversal alert or a 3-bar reversal, same signal came in there. So there's your reversal alert and there's your 3-bar reversal. So see if that does any more downside today, but that's a nice looking opportunity for a short today. And it's a propulsion gap fill. Nice. So that little accumulation break there. Looks like that could potentially be an add. If you want to scale into it, obviously watch this area here. Got double monthly level coming up at 175 ADR. If it was to get there today, then that would be a beautiful short. Right. News has just come out. French is up. Down on indices, I suspect. Bit of a whipsaw. So no trades on the 15-minute ranges. So I'll be waiting for the 30-minute ORBs this morning. Not a lot of movement at all, really. Just bear in mind, we got a gap fill on DAX as well today. So that will need to get filled at some point. 3R downside is actually in the gap today, but obviously we've started to break long. So we'll see where we go. Right, so that's your news covered. I'll go through all the pairs this morning as well and see where everything is So that's slightly bullish. Where's all the history gone? Currently no related stories. Where's the historical data then? Where's all the historical PMI data gone? History's missing. Don't know. Anyway, I'm testing it on futures and would be helpful to see it. See if it calculates ADR properly. It does calculate ADR properly. You don't need to see it. If you go into the log, did I have logging? No, I don't have logging on that. No, it doesn't show it. So sorry. You can get an EA to an indicator to do it to show you the ADR, but the new EA in the works. What's the strategy in 10 words? Breakouts. Don't need 10 words. It's breakouts, and I'm not revealing the strategy. I have decided, everybody, I'm not revealing any more strategies because people are just copying them and selling them. So I'm not telling anybody what I do. So this amazing thing here will be released as an EA if I decide to release it. But I'm not going to tell you what it does because someone will just rip it off. I've been away for a few months, but I'm back. Stephen, you are ER. The devil horns are down there. I don't wear the devil horns anymore. Got rid of them. Morning, Virginia. Morning, it's time. Right, let's have a look at FX side of things. There's no breaks this morning, so I'll be waiting for the 30-minute ranges to go in and then see if we got a range break of the 30-minute. I could put those ADRs on as an option in here, I guess. The calculations. I mean, it's that all I did. The only reason the calculations are there is so that I can verify calculations are correct. I've verified calculations are correct, so therefore I don't need them anymore on this. So it's a development thing. So it's just to display data so that I know that the maths is working. The maths is working, so that gets removed. Once it's a testing. This is a test EA, which is why that data's there. It would be helpful, but not for anybody but you. I can't release it just because you want it, Vitaly. Sorry. There's no point. I'll put it in the list of possible things to do, but you don't need to know it. It's got nothing. Your job is to use it to trade with. Your job isn't to check my maths. My maths is right. I know it's right because this thing's made 225% increase on my account in the last 7 weeks. If the maths was wrong, it wouldn't be working, would it? You don't need to know. If you want to know, build your own. You can build these things, people. Right, I'm going to carry on with FX, but I will put it on the list. ADRs, none today. It's dead at the moment. We're waiting for these PMI numbers to come in. For some reason, Euro US dollar is not working on the dash. Weird. Don't know why. Weeklies, obviously there's no weeklies. Monthlies, we hit these monthlies right at the beginning of the month. Yeah. All these euros, obviously the squeezes we've had on the euros are all starting to play out now. Although they are stalling a little bit. We've had a decent pullback, but they are starting to stall out. So it's gone kind of into a contraction, which obviously could go either way. So it's a little bit tricky at the minute to determine what's happening with these euros, but they are sort of stable. So stable, obviously, when you get a parabolic move that goes into an accumulation, it can easily just move straight up again. Yeah, this is not pulling back, basically. So this tells me that these are commercial orders, likely options purchases, which means there's no need to take profit on them because you'll be taking profit in 3 months' time. You won't be taking profit now. So there is a potential, obviously, for this to continue, but that is going to be based on what that thing does, and obviously that's based on what Trump does. So we'll see. But there's nothing else really to look at on those dashes today. RSIs are flat, so I'm going to whiz through all the pairs this morning and just have a look at really where everything is, and have a look for opportunities for potential movement. Somebody messaged in the members stream at the weekend about a AWR. Was it a week? No, it wasn't in the members stream. It was in the main group, wasn't it? About using AWR, or rather they put together, I don't know if anybody saw it, you probably did, but they put together an AI thing, which is really funny. But I can't find it now. Where is it? There it is. So they used AI basically to see if they could improve the position trade at EA. And AI put together a 10-minute interview between a man and a woman discussing the merits of AWR and how you could use ADR within AWR extensions to make more money and make it better. It's like, I don't know. Anyway, upshot of that is just use the daily time frame. So basically what they were saying was, if we wait for average weekly range extensions, and wait for something to get extended to its average weekly range, i.e. it's got to push hard, then when it's above those levels, then try and take ADR reversals, because that will increase the profitability or increase the strike rate of those potential mean reversion moves. So this basically AWR will get hit when something pushes strongly in one direction for somewhere between usually 2 to 5 days in a row. When you get a push of 2 to 5 days in a row, you will also get an RSI extension. Like that. Okay, so there's a million ways to measure the same thing. Elastic band theory, price being stretched, consistent movement in one direction requiring a profit take, can be measured in a million ways. There's people always come up with different ways. Oh, this will be better. This will be better. This will be better. It's just different. It's exactly the same, but different. So this pushed up for 4 days on the trot. That will have been a weekly range extension. It's also an RSI extension. It's also a 3-bar push, 3 days in a row, which is another signal that people use to mean revert from. If it's pushed for 3 days in one direction, like there, for example, it did 4, it's likely to pull back for a day. So all the, I can include in the position trade at EA a billion different market conditions, but they all do the same thing. They give you a 50-50 probability of when you get into that trade, either it working or it not working. And it doesn't matter which one you use. You can use RSI extensions if you want to. You can use average weekly range extensions if you want to. But the problem is, the longer you wait, the bigger the strength of the signal, the fewer the trades you have, which means you miss all the ones in here which made a profit, because you were waiting for that one to happen, and that one happens 10% of the year. So you miss 90% of the profit. It's the same principle as people saying, I'm going to wait for Lee to get into 6 trades in one direction, and then I'm going to take my first one, which is a great idea, because if I'm in 6, it's really extended. So you've got a very high probability of that pullback happening, because it's stretched so far, it's likely to snap quickly, isn't it? However, you're going to miss all the trades that I've taken, which have taken 3 to 4 positions, which makes up 70 to 80% of my profit for the year. You're going to miss all of that because you're waiting for the ones which are squeezes. If you just want to trade squeezes, wait for it to go 5 days in one direction and then take a trade. Press the long button. But look at the odds. If that wasn't enough to get out, you still got into a multi-day stroke, multi-week move, because the odds are the same. It's 50-50, isn't it? So I just wanted to kind of discuss it quickly, because it's a good idea. It's a great idea. And it's something that I might well incorporate into the position trader EA. So you are only going to take trades on weekly range extensions. That's no difference to taking an RSI extension or a CCI extension or a 175 ADR extension. It's all the same thing, isn't it? The market's moved in one direction for a long time. That's it. So we have a snitch here leaking your strategies. All constantly. People, I've lost count of the people I've sued. Basically, I created the Bootcamp, put it out there for free, and then people go and build systems on the Bootcamp and sell it. It's my intellectual property right. You can't sell it. It's mine. I made it. Yeah. I come up with a strategy, I put it out there, and someone builds an EA and starts to sell it. Yeah. I came up with the strategy. Yeah. Tony Crabell came up with the opening range breakout strategy. I've made a variation of it. And this is the problem, Mumo. People will go, I've changed this, so it's not his strategy anymore, which is fine. You can do that. But if I don't tell you what my strategy is and I just sit here and show you how I make 6 figures a year, and if you want to do it, you buy my EA, I'm not going to tell you how it works, I can't be copied. It just protects me for the future, doesn't it? But it's, it happens all the time. Every few months, somebody, I had somebody that's in one of the members, in the members group, said, I've got a group going, yeah, and I want to basically teach them this, that I'm going to charge them money. So you're going to rip me off and charge money for everything I've taught you, are you? No, you're not. Yeah, that's what happens in this industry. So I've decided to go undercover, basically. This strategy is absolutely killing it. I'm not going to tell you what it is, but I'll make an EA and you can buy it. But if you ask me how it works, but that is what you say, isn't it? I can't remember what the saying is. It's like, I don't know. Mimicking or copying is the best form of flattery, isn't it? So if you're doing something really well and someone copies you and does the same thing, it's because you're doing well. Yeah. But the problem is, I don't benefit financially from anything I do. And I'm not having other people benefiting financially from what I do. If I teach you something and you go and then sell it to somebody, I think that's underhanded. I'm not going to teach anymore. I'm scrapping all teaching. This is part of why I'm taking this week off. Success invites imitation. Yeah, that's something like that, isn't it? Yeah. But yeah, it's just, it's happened all the time. Every time I build something, someone rips it off. Market reverse alerts indicator. I built it. I started selling it because it was brilliant. I started teaching with it. Yeah. Within months, there were 3 versions of it on the marketplace. All shit. None of them worked properly, but there were 3 copies trying to do the same thing. Make a group with an NDA. Not worth the paper it's written on. Have you ever tried to sue someone in a different country? I haven't got £1 million in the bank to instruct solicitors to chase someone in America. I'm just not interested. I'm just decided I'm going to scale it all back and just going to do what I do, which is make money. And if people want to make money with me, fine. This is the EA. How does it work? It just makes trades. It's based on the indexes and opening ranges and stuff. But if I give you the secret sauce, you're just going to copy it. So I'm not going to get it. I'm just not going to give the secret sauce away. Which is why partly the opening range breakout strategy has a fantastic loss recovery logic in it. I'm not going to tell you what it is though, because someone will copy it. Yeah. But it's become very apparent over the last 3 months really that it's happening so much. I've had people messaging me with groups saying, have you seen this group? The Market Reversal Alert Traders group. What? That's my name. And they're basically, they've got someone has built a dashboard that is basically based on this, that does that, and it's basically everything I've ever taught being sold for $200. So I can't be asked anymore. Is basically what I'm saying. I'm just not going to do it. So I'm just going to do my own thing, which is going to be lives. Obviously, I'm just going to trade and then show people what I do, which is the easiest thing to do. And then you can. If you want to build your own things and guess it, fine. It's not rocket science. There's only a certain number of things you can do in trading to make money. Yeah. And the same with the members group. I'm not sure what I'm going to do in the members group. I wanted to do a big sort of course thing with it, but there's no point because it will just get ripped off and put out there and it loses its value. The value is, as far as I'm concerned, the value is me. Yeah. People ask me questions, I give one-to-one answers. People access me in Discord, I answer questions. People come into the members group, ask specific things. We spend half an hour to an hour dissecting it, analysing it, and going through the subject matter. That's the benefit. But then someone takes it and goes and does something with it and tries to make it into a commercial product. Look at ICT. Yeah. Why doesn't he sell courses anymore? Because 1,000 people ripped him off, which is great because I hate him. But hate's a strong word. But I just like the way that he cons people. But that's what happens in the industry, isn't it? And it's, I've been made aware that it's no point in me spending my time doing it all to make other people rich. Yeah, I might as well make myself rich if I want to do that. I'll set myself up and say it's £1,000 a month to access me. I'll have 5 people in here for £5 a month, and those people will do very well. A turtles group, if you like, that'd be a better way to do it. But I don't want to do that. So anyway, I'm waffling. So all I was saying was I'm not going to release what this strategy is. I'm not going to give it in detail. The members know what it is roughly because they've seen it in the member stream because I've been developing it in there. But I'm not going to come out with my normal video which says this is the strategy, this is the exact mechanism, this is the workings, this is I'm not going to go into the details of it. It's going to be this is a breakout strategy. It's got a mathematical equation which looks for ranges within specific periods, and it does this, that and the other. It's got a loss recovery system and it uses this, that and the other. That's how it works. What's the intricate details of it? Not coming out. Yeah, that's all it's going to be moving forward, as I say. And also the other thing I wanted to do was a lot of people are getting still confused with the position trader EA. It's over complex. It's got to the point where it's got so much in it now. It's got to that complex point, which is a problem. So what I might do is break this down into an ADR EA, an RSI EA, an AWR EA, and have multiple products, which are all really, really cheap EAs, like $30, $40 or whatever. But they only do one specific thing. So this one only does ADR. Yeah, this one only does RSI mean reversion. This one only does weekly reversion. Yeah. So that basically it's clearer what each strategy is. And again, the mechanisms, it doesn't matter, does it? But you can put it in the back tester and you can see what it does. It works. So I might do that. And break all the products down into much smaller EAs, which are less complicated and have less features and functionality. Because a lot of this stuff is just pointless still. Drawdown control. Most people don't use drawdown control. Aggressive drawdown control. I don't use it, but people wanted it, so I put it in. And it's going the same way as the market reverse alerts EA. The reason that thing I've scrapped is because it got too complex. People couldn't use it. It had too many inputs doing too many things. And this is going the same way. It's people are saying, can you add this? Can you add that? Can you add the other? It's just too complicated to use. It'd be easier if you just had one EA that is like, I want to trade ADR, mean reversion, intraday with a stop loss. There you go. There's the EA that does that. Then you don't get confused with, should I use RSI? Shouldn't I? That's all that does. It does ADR. Yeah. And just have a kind of an EA for each strategy, if you like. But as part of what I'm going to be doing this week is looking at ways to simplify it all, really, just for people. Shame you're getting ripped off. I've been ripped off for 5 years, mate. It's not a new thing, yeah? I've had to sue 3 people and have their websites removed because they copied exactly what I do, which is absolutely fine for them. But if they get caught, they go to court or they shut down. I didn't take them to court. We never got to court. I just shut them down. Not having people making 10 grand a month off of what I teach for free. Not happening. Who has ripped you off? People. I'm not going to go into the details of it. Don't let it get you down. It doesn't really get me down. I just can't be arsed with it, Don. That's all it is. It's now got to the point where I can't be bothered. It's a fact of life, and the easiest thing to do is just not do it. If I don't teach it, people can't copy it. Yeah, I will come in here and I will do what I do every day. But there's no point in going off and trying to help people. This is the conclusion I'm coming to, because all the people that are involved have got an underlying agenda, and I don't need it. I don't need all of the crap. We trust you because you're not trying to make money from courses. Exactly. Yeah, and you can still buy the EAs. The EAs are a way of, the members group is a way of supporting me to keep going. Yeah, I make less than $1,000 out of YouTube memberships a month. Yeah, I can't even pay my mortgage on it. I can't pay my car on it. Right? It's not there financially. It's there to try and constrict the number of people, because I don't want 1,000 people. But the problem is, when you constrict the number of people, the people that are paying are the ones that really want to do something with it, but most of them seem to be wanting to make money out of it, not do it. And that's the difference, isn't it? And I can still sell EAs and make a nice little sideline off of it. In fact, I'm thinking about literally going that route and going EA only. I'm going to become an EA developer. I'm thinking maybe that's a really good thing to do, because I love doing strategy development. That's what I do this for, to crack this. This is what my passion is making money out of this and beating it. So becoming a developer for other people that want to develop strategies and helping them develop their own strategies is great. I will teach you everything I know about helping you to get your strategy working. But it isn't going to be free. It's going to be £1,000 a week. If you want to make a product that sells for 10 grand a month, and you're going to want me to do it for you, it's going to cost you 4 grand of my time. That's the thing I'm thinking of doing, is setting up. So yeah, I'm here. Brilliant. I've got 18 years experience in this industry. You want to tap into my knowledge? It's £1,000 a week. And if people can't pay it, don't do it. It's just too many over the last month. It's just like, can't be bothered with it. That is normal in this industry. Yeah, there's nothing you can do about it. It's not getting me down. It's just I can't be bothered anymore. I'm not feeling down about it. If I didn't stream again for the rest of my life, the only thing that is better is I have more time to spend doing what I want to do. Yeah, I do not lose any money. I do not lose anything. I just get on with what I'm doing, which is what I do all day long. I sit here and I trade. So all the people I've helped do well, but they seem to lose my number after. What? Don't give me your number, Franco. Then they can't lose your number. Anyway, let's get on with the analysis. Aussie dollar CAD. So I'm going to go through the Aussies. Start off with, I've got one long on the Aussie CAD at the moment. I'm changing this this week as well. So I'm just going to get my EA reset up this week to use a $10 max swap, so that I can get into more opportunities, basically, because I'm being a bit restricted at the moment with directional bias with the swaps. And I've done a big analysis over the last week as well on swap. I'm just looking for the folder. I'll put it somewhere else. I've done a big analysis on historical swap data, which I've managed to do. Which again, I did a little bit of in the member stream, but I've been doing more of over the last couple of weeks. There's no real correlation between swap cost and directional bias short to medium term. Long term there is, but over a month or so, if something has got a negative swap, it doesn't indicate price direction. So that's kind of what I wanted to test with that. So it comes down to, at the end of the day, how much do you want to spend holding a position over a period of weeks? So what I'm going to do is move this up to $10, so that it's going to allow me to trade a lot more in either direction. But $10 is still slightly high. So it just will filter out anything that's ridiculous. So mainly the Swiss pairs and the yen pairs. The Swiss is $18.90. The yen pairs are $20, $30, $40. So I won't be trading yens and Swisses unless they are positive swaps. But apart from that, it should open up the ability to trade pretty much any FX pair, because the swaps are actually getting better on them all anyway. But you can see Aussie Swiss here is $8.20. Happy to trade Aussie dollar Swiss, but I'm not going to trade pound Swiss because that's way too expensive. Yeah, so that's going to be changing. But I've got a long on here at the moment. Can trade this in either direction, Aussie CAD. So we're range bound at the minute. We've just come out and taken out last week's low. Previous week's low, and this little area here, the propulsion gap didn't hold. So looking for a push up into these propulsion gaps at the moment. If this market structure shift here is going to continue to the downside, we should be looking for pullbacks somewhere into here for a continuation short. And then we've got the monthly levels here. So scaling in would be down here, second entry. And then if we get all the way down there without a pullback, there's a high probability of coming back up into those propulsion gaps. Aussie dollar Swiss, sideways at the minute. As you can see, we've been sideways for a couple of weeks on this. Last entry was there. So looking for a push up, basically 150 ADR. We are looking like potentially we could be forming a symmetrical triangle contraction here, ready for a breakout in one direction or the other. Swiss franc reduced interest rates last week. We just had the PMIs out for Germany. Let's see if there's any trades today. Okay, so short on the DAX, which means I'm hedged on SIH. Still long FTSE, so hedge on the SIH at the moment. Good day on Friday. Nice big win on Friday. So again, that accounts up 80% over the last sort of 4 weeks or so. Really good performance on SIH. But yeah, hedge there this morning. Likely it's going to do the gap fill. I'm just choppy at the minute. So I have a short on with ORB V3, but no trade today on the FTSE because it's going nowhere. Yeah. So this is the whole idea of this logic in ORB. Yeah. This thing's not moving, therefore we're not trading it. Yeah. So in 30 minutes, it hasn't had any momentum, any volume going through it. So we're not interested. We'll wait. If it goes now, that's fine, but that volume is still not high enough to take a trade on. And it probably will go, and it probably will break. But historical data says that the probability is lower. Doesn't mean it's not going to happen. There's still a 50-50 shot of it going parabolic today, isn't there? It either will or it won't. So, but the logic is obviously sound. Let me just look at the levels on this for a close. Oh, well, there you go. That's a nice, easy one today. Taking a partial at gap fill. There we go. Right. Aussie dollar Swiss. So yeah, nothing much moving on that one either. Again, can trade it in either direction. We've got no extensions. Last extension was down here, which wouldn't have worked out. So you'd be in, probably still in one actually, maybe two, probably just one. We haven't gone anywhere since we got that last extension. Obviously that one worked out beautifully. So we've got a nice support coming up at this weekly level here. So this is the 3-week low and the 2-week low. So if we get an ADR hit to the downside, there will be a long going on there. Aussie dollar yen, all the yen pairs at the moment, very, very, very sideways. Again, I would only ever trade yens long at the moment, i.e. going short against the yen, which is probably not the best thing to do at the minute. But yeah, so looking for a push up basically from where we are at the moment. It does look like the structure's shifting to the downside, to the upside. We are holding quite nicely here, but obviously the overall trend is bearish. So it's very, very difficult to trade any of these yens at the moment. If you look at all the yen pairs, they're all doing the same thing. Since the intervention, we've kind of gone into shell shock mode, quite a wide range shell shock mode, but we have gone into a shell shock. So they are stuck. At the minute, we are holding the lows. So there does seem to be a low forming on all of these at the minute. So they do look like good long opportunities. However, you've kind of missed the first leg. So it's whether or not we are going to make a continuous move back up, retest these old highs, or we're just going to continue making lower highs and keep dropping. So very hard to trade these at the minute. A lot of contraction going on the pound yen there as well. So at the minute, for me, it's only longs. So RSI extensions to the downside, ADR hits to the downside for long opportunities. But the Japanese are doing a lot better. Interest rates are coming up. They're starting to use interest rates to control inflation more, though inflation is still going up. So there's, there is interest rate rises coming, which will make it more bullish. But they are way, way behind everybody else. So the interest rates, obviously, we're still 0.5%. Everybody else is up in the 2s, 3s, and 4s. So they are still a long, 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 long way behind everybody else at the minute. So it's difficult to call. but certainly seems like the yen has kind of become more of a normal currency, which is great. But what it does mean is that the old US carry trade is no longer there. Yeah. So buying against the yen potentially now is not going to be the case. Since that intervention, we didn't come back and test the intervention level. We've made a new lower low on the US. Yeah. So again, we made a higher high and a lower low, which is an expansion, which means volatility is increasing. And, you know, it does look like that we're going to get some continued strength on the yen, but it's never going to out trump that, you know. So, I mean, we are still going to be, if the US dollar powers up, it is still going to be strong, but you're not necessarily going to be in a case in the future in the next 6 to 12 months where you only long it because of the carry, the swap, which is what the banks and institutions have always done. So all these yen pairs at the minute, I'm still not really trading them. I will introduce some yen, but at the minute, I'm not really sure which I want to do. Pound yen is really the one that I'm most interested in, because I think that interest rates in the UK are going to freeze, and potentially it's going to give a little bit of strength to that US, but obviously we'll find out what happens with the budget this week. But yeah, so don't know, not sure really which way that's going to go. Aussie, New Zealand, much more interested in longs on this one. Again, long and short. I wasn't trading longs. I was only looking for short opportunities on this, but I'm going to change that so that it encompasses the longs. So I'm going to move my swaps up. So yeah, I'll be looking for long opportunities on this. Ideally, there's a lovely one there, as you can see on the daily time frame, but hourly we had one back here. So there was a scale in here, which is now playing out nicely. We're in propulsion. Looks like that might be holding today, but we'll see. This is the level you want to be watching for a potential continuation short on it. But go either way. So again, this is just kind of a normal instrument now. Aussie New Zealand is very, very, very squeezy. So, you know, when you do back testing in depth, Aussie New Zealand, regardless, every strategy I back test, not just position trading, but every strategy I test struggles on this. If it's a trend strategy, because these two are trade partners and in effect pretty much the same country, from a trade perspective, you get a lot of this. So trending strategies really struggle to make money because there is an awful lot of range bound activity. Mean reversion strategies make money for good periods of time, but when it squeezes, they get killed. So it's the type of currency that is either doing that or it's doing that, and it doesn't have a kind of an in-between very much. See the strength of this move. No pullbacks, really, that you would be able to get out on until now. So it squeezes quite hard. So it's not the most fun thing in the world to trade, and it's kind of, at the moment, it's not in my portfolio, but from a breakout perspective, might be okay. But at the minute, you can kind of trade it in either direction. But it's one of those where I would, if I was trading this now, it's kind of the sort of thing I would put on an 80-20 extension. So if you're going to get into it, make sure it's really stretched. Yeah, weekly range extension. Make sure it's 125 of its weekly range before you start. Make sure it's over 80 RSI before you start. Just to make sure that you're getting in that little bit later, because if it goes into a squeeze, and it's one of those that I've had to cut completely at a 9-10% loss before, you want to get in as late as possible. Aussie US, looking for bounces off these lows. Reversal alert's gone in, looking for a push up into propulsion. Reversal was there, so second entry possibly you would have had there. I'm not in that for some reason. Oh, I didn't have Aussie US running at the time. So again, this is something I'm going to do this week. I'm just going to get everything set up properly this week on the VPS, because I've been taking a lot of manual trades on my other account rather than using RSI at the moment. And I just want the VPS set up properly for when I come back to streaming. CAD Swiss, sideways at the minute, nothing moving. Canadian dollar, unknown because of trade tariffs. At the moment, it looks like they're sorting things out. So Trump has been talking to Mexico and Canada, and it looks like they are coming to sort of an agreement. So the whole fentanyl rubbish. That's why we put the tariffs on, because you're not controlling fentanyl. They've turned around and now gone, you told us to do this. This is what we've done. Now what more do you want, Donald? And he's gone, all right, yeah, okay. You look like you're doing quite well on it, actually. So basically, open your mouth, don't engage the head. Now he's engaged the head. He's like, okay, we'll maybe drop the tariffs, or we'll have smaller tariffs. So Canadian potentially has the power to move up now. Swiss obviously reducing interest rates will help this. So big move up last week and a retest of propulsion. Looks like it's a long to me. So mean reversion, obviously you'd be looking at somewhere up here potentially for shorts, get in on a pullback. But long term, very difficult to call at the moment. That was caused by obviously all the tariff stuff, which will undo if it undoes the tariffs. But Swiss franc weakness should make that pop. So yeah, more interested in the longs than shorts, but again, can trade it in either direction. Euros, your guess is as good as mine on this. I've no idea. This is an options purchase, obviously, because they're not pulling back on it very much at the minute. We've gone sideways for a week or so. So it's a case of the euro is weak. Based on interest rates and everything. There's no reason why it should be bullish. They have issued a lot of potential additional borrowing that they're going to need to do, which is what the market seems to be buying up on. They're assuming that they're going to go into more debt, which is going to probably mean higher interest rates, which would be bullish. But this is all speculation based on Trump also adding tariffs on. So this is all to do with the tariff wars. So the big question is, which is what we're going to continuously have, is are we going to put those tariffs on anymore or not, Mr. Trump? And what are you doing with them? And that is very, very unknown at the minute. So again, with the euro, there's nothing you can do about it. It's just one of those squeezes that happens, and you just got to basically wait for those normal extensions to come in. It is calming down. So the question is, are we going to undo, which means coming back down into this propulsion, or are we just going to flip-flop around and then put in a new leg and upwards? Difficult to call. But either way, all these euros are massively stretched. So the obvious targets are the previous monthly highs. So last month and the previous month's highs, obviously what we put in this month, we've completely exceeded those levels. So there's still a lot more downside on all of these, technically. However, are we going to need it? So I've got a long on here, as you can see, on the Euro Swiss off of this RSI extension. So I'm looking for a push up into there. If it comes down into here, then I'll be in 3 or 4 positions before we start to bounce back out again. Euro Pound, again, longs on that one at the moment. Just waiting. So that was the RSI extension there. That was that entry there. Got out of all the shorts last week, and then I'll obviously flip long. So if it comes down, and it is going to come back down and retest this area, obviously there's going to be 2, 3, maybe 4 positions by the time we're back down here, and then we'll be looking for a pullback on that leg. But obviously the pound on Wednesday could go either way. Could have a massive move on the pound, obviously, with the budget. Out of Euro New Zealand last week, no trades on that at the moment. As you can see, since I exited on the RSI extension, I was expecting a bounce, so I got out. It has bounced. Waiting for short entry. If we push up into this propulsion gap, I'll be getting in short again up there. Obviously, if it continues to flip-flop around, then we'll just wait for it to extend and wait to get in again. Euro US dollar, out of all those last week. I didn't want to take this off last week. I had to, because I just wanted to bank some profit and get the P&L down, basically. I'm holding pound US dollar still, which is one of the reasons I got out of this, because euro and pound US dollar are correlated. So I wanted to just reduce the risk on the dollar, basically. So I still think this has got more downside. I got out of it because I was overexposed and correlated in another correlated pair. But this, to me, isn't big enough of a pullback on this move. I think there's a lot more room for downside. If we break last week's low, as you can see, last week's low here was pretty much the price actually closed on this previous weekly low as well. So they tried to break this previous weekly low, couldn't, and price closed on that low, and then they rebought it on Friday. So today, if this move here holds, so you've got a reversal alert, a retest of the reversal alert here. So these propulsion gaps here, they added into. They then broke that low with that propulsion move here. Yeah, they retested and added and added, and they've added again this morning. So this is where the sellers are. We know that because they broke that low with a propulsion move. So if they break this low today, you're breaking this level here, potentially. Yeah, there's absolutely nothing to stop you until you get down to the previous double monthly high here. So all these propulsion gaps should get filled. It needs Trump to say something bullish. Lagarde's not talking this week. We've just had the PMI numbers come out mediocre. So there's no massive bullish or bearish catalyst on this, apart from obviously the US at some point this week. So if we break this low today, I think you've got a really nice flush to the downside on the cards, but we'll have to wait and see what happens. It could be holding, and we're just going to flip-flop around up here while we're waiting for Trump to decide what to do with tariffs. Don't know. But I'm out of that one. As you can see, I'm in the pound US still shorts. So the pound at the moment, very sideways as well. Everything has kind of calmed down over the last week or so. We've started to obviously unravel. Profit taking has started. We've started making money out of those that we were squeezed in. So, but we haven't actually gone anywhere. Market is still sitting around going, what the hell goes on next? Yeah, we've still got trouble with Russia. We don't know what's going on there. The Europeans still don't know what they're going to do with trade tariffs. Trump's cut off everybody in the West, basically, trade-wise, support-wise, everything-wise. It's a new world order. Every country has now just been turned into a baby and has now got to fend for themselves again. So from a fundamental perspective, every country is now having to look at costs, having to look at defense spending independently, having to look at all of this stuff. See where we go. So we'll have to wait and see. But pound at the minute, we are holding the highs at the moment, so it does look like a nice short. Wednesday is the key day for this. Obviously, when the budget comes out, it could go either way on the budget. It could do nothing on the budget. So at the minute, there was an RSI extension to the upside that you could have taken short there. The shorts on this are far too expensive. 13.10. I'm not trading this short. I would only go long on this, so that's not something I got into. But there was a short, and as you can see, it's not really gone anywhere from it. So downside targets are in propulsion. You've got two nice downside targets, and obviously we've got the big propulsion moves down here from when we had the rally on the tariffs. So again, this is very much in the same boat, the pound, as the euro. It looks like this is all commercial and not a lot of profit taking needed on it, but we'll have to wait and see. So pound obviously this week has got big news. So we are in contraction. I don't suspect we'll get a lot of movement on this until Wednesday. And then on Wednesday, once we get the budget, we will have a good indication then as to what they're going to do with the pound. Yeah. So the budget really is just an analysis of spending, and spending here from the government, monetary policy shift from the government, knocks onto what the Bank of England do. Yeah. So the Bank of England will look at this, and then it will forecast what impact what they're doing governmentally will have with economics, and then they will adjust their policy regarding interest rates from there. So, and obviously borrowing is a big part of what we are doing at the moment in the UK. So this is important in the fact that the Bank of England are going to look at it. The euros coming out at the moment are probably mixed. Thinking about it. No. So yeah, so we'll see what happens with that. But that's your main driver. So we're bullish on manufacturing. We'll be bearish on services by the looks of things. There we go. So bearish on services. So not really any impact on the euro there. Stopped out break even on the DAX. Again, not going anywhere. There you go. So again, FTSE. Yeah, it's a great example of why this this variation of the strategy is so good, because it's more intelligent. It knows that this thing is not moving, and if it isn't moving now, it's probably not going to move much because there's no interest in trading this morning. Same with this thing here. There was no movement at the beginning. We got a 30-minute range, so we keep a tight trailer on it because we've got low momentum, which stopped out because there is no momentum. So we don't lose any money. We make a tiny bit of money. That's it. So that's that one for the morning. Unless it breaks long. So we still got long opportunity on the 30-minute range. I would probably stick my partial down there today. Just see if we can get a quick break to take something today if it breaks long. Obviously it's got to break long for that trade to work. So other than that, just wait for the US markets to open this afternoon. Pound CAD sideways, not doing anything. Pound Swiss very much the same. We are absolutely sideways on this. As you can see, there was one opportunity for a long which was very hard to get into because it was a V-shaped recovery. You would have had a 5-minute reversal alert in there, but very difficult. Not really gone anywhere. So there's just been nothing to do on this for the last 2 weeks. No entries. I'm only taking longs because of the cost of shorts. So just nothing to do on it at the minute. It's sideways. The pound New Zealand, again, adjusting swaps on this. I'm undecided on what I want to do with this. The cost of swaps on this is very expensive, long and short. So longs are 960, shorts are 810. So putting up to $10 encompasses both directions, which I'm happy to do, but it is quite expensive to trade. So I'm going to do one of the things I've got on my list this afternoon to do is do a correlation report and just see whether it's worth trading this. So the way that I covered this on Friday last week, I think we looked at correlation. So I'm going to do a correlation report and look at which pound and New Zealand pairs to trade. If there's better ones that are non-correlated, I probably won't trade this, but I'll see what happens. I'm going to issue a list of what I'm going to trade with the Position Trader EA on full automation when I've got it sorted, basically. But you had a short on Thursday, which played out 50% retracement. So that was nice. And obviously the long that was started here has already played out from last week as well. So if you have been trading it, it's been just sucking up money. This is a great example of what I was talking about earlier at the beginning of the stream with the person that said about weekly range extensions. If you wait for a weekly range extension before you get in, I don't know if that was a weekly range, it may well have been, but you know, you miss all of these where we get in here, you take a second and a third and you get out. Not so much the weekly range, but the people that wait for me to get into 4 to 6 positions and then they take their first. You didn't take that profit, yeah? 3 trades on and a 1 ADR push is a very, very healthy profit. You don't get any of that. You miss it all. And this is what 90% of the trades are. If you look through, do a back test with the Position Trader EA, export the data out and put it into Quant Analyzer to see how it works, you'll see that there's only a very, I don't know what the percentage is exactly, but it's a small percentage of the trades go over 6. Very rarely do we go over 6. And if we go over 6, it's because we've got something parabolic happening. Yeah, most trades with a Position Trader EA consist of 2 to 4 entries and then an exit with an ADR or 3/4 an ADR or whatever. So, you know, this makes up 80% of the moves. That type of trade where you get in here, doesn't work out, you take a second, you take a third, and you exit within a week. That is absolutely typical. You miss all of that. So, you know. But anyway, so nothing really to trade on that one at the moment. Pound US dollar, this is the one I'm shorting. I'm holding this. That was an exit. So if you are using automation on this with the Position Trader EA, I have mine set up at 1 ADR as my exit. I've manually, for the moment, removed that target because I want to get a big run to pay for some of the losses. So that move there is 81 pips. ADR on this is 70. So the EA, if I'd have left automation on, would have exited there with, I think it was 9% profit on Friday. I decided to intervene and remove the automatic targeting because this reversal alert here that happened and we broke that low considerably. We tried to push up, then we broke that low. It looks to me like the market structure is shifting short. So my average, as you can see, is here. So on Friday, when we were approaching target on that news, I turned off the automatic exit and I saw it got to just about 9.4 or something like that profit. And then it started to pull back, and it pulled back to about 6% or something. And I was like, fine, I'll leave it over the weekend. So the only reason I'm doing that is because I've got that much wiggle room. Yeah. So I've got half an ADR of movement before I get to here. And at here, I can still press the button and go, screw it, and I'm out. And I lose absolutely nothing. So this is a completely risk-free trade for me. This has the potential, if it breaks this low from last week, and then we come and test the previous week's lower ADR 125 today, if it was to get there today, which we've got PMI figures for the pound and the US. So let's say, for example, negative PMIs for the pound, positive PMIs for the US, we will be here with no problem at all. If it gets down to there, first of all, that's around about 12 to 15% profit. If it breaks that level, we have got a flush all the way down to the previous monthly high. All this propulsion. That, for me, is going to be somewhere in the region of 30 to 40% profit. Yeah. So when you look at a runner, that is one that will pay the mortgage sort of thing. So that's why I'm holding it. I've got very aggressive positions on above the line. I've got 3 normal size positions below the line. Yeah. So there's absolutely no risk for me. If this propulsion gap here that is tested and holding this morning holds, yeah, so that retest and add there, which broke again the lows, we are retesting this level and it's holding at the moment. If this bearish engulfing goes in and we start to break and we go through that propulsion gap, that confirms for me that this high here, so market structure high, is holding. And if we break that level, we've got a big flush. So it's a very risky trade, which I'm keeping an eye on over here closely. If it starts to push up into here and it looks to me like it's failing, I'll probably just pull the plug at break even. But if it doesn't, it's going to get back all my losses. That's the type of trade this is. And this is the sort of thing that you cannot do in backtesting. Yeah. If you have a bad loser on an individual or multiple positions, you adapt. This is adaptation. Yeah, you're only going to do this and know this when you do it, when you see it and you live through it, basically. So my decision-making process here is based purely on what has gone on in the last month. If what has gone on in the last month hadn't gone on, I would have been exited there anyway by the EA automatically at 9% or whatever it was, 9.4%. So that's what I'm doing with this one. So again, this is why I removed this. This was 7%, something like that, last week, because I had the euro and the US on. And as you can see, the euro US and the pound US, yeah, very similar price action. So it's double exposure. So I've taken 50% of my exposure on, banked a nice amount of money, which pays for some of the loss. And I've got basically what I'm saying is this and that trade were combined. This is TP1. This is my runner. This runs, brilliant. If it doesn't run, it gets out of break even. So I only take 50% of the profit on the move. So that one, again, we've got ISIS. I'm hoping that this will start moving at 9:30, looking for negative numbers. And then this afternoon at 1:45, perfect for me would be positive numbers there, because weak pound on weak PMI, strong US on strong PMI is going to mean double dip on the pound US today. So we'll see what happens with that. New Zealand dollar CAD, we've had an extension on that one on Thursday last week, didn't really do anything. So you'll be in that long at the moment, looking for additional entries here. And then pushing back up into propulsion. It's bullish at the moment, but only bullish at the moment because of the CAD. Remember what I was saying about the weakness in the New Zealand economy at the moment. If the New Zealand economy is weak at the moment and it's pushing up against the CAD, you can see how much damage Trump did to the Canadian dollar and the tariffs. Something that's really weak, beating the CAD means that this thing is being hammered into the floor. However, talk of tariffs removal, strong CAD again. So these are both commodity pairs. So they do both quite often move on the commodity markets, and obviously those are massively affected at the moment by what Trump's doing, because he's putting all the tariffs on aluminium, imports of everything. So yeah, don't see any reason why you can't trade this in either direction at the moment. That was the last entry that I had on it there. All these shorts were just too short-lived basically to get entries on, but you know, that, I mean, realistically that one probably was a short. You had an exit on that easy. That one was definitely a short, which you'd be out of already now anyway. So we're waiting for the next setup on that long. New Zealand Swiss sideways, gone nowhere in the last week. Last entry on that one was here, which you will have been out of. New Zealand US, same thing. Last entry, there's your reversal alert and retest. You're out of that, or you're still in it and in loads of profit. In fact, you probably would have been out if you had any sense there on that one. So yeah, there was a long opportunity. You might actually have been flipped in long there. Swaps are good in both directions, so yeah, should really be long on that at the moment. Next entry on that one, obviously weekly low bounce, and then you've got this area here of propulsion, which is a break of that area there. So second entry, third entry, pull up into there. US dollar CAD sideways. Obviously the tariffs have been, there's the tariffs. No, we're not going to do the tariffs. Yes, we are going to do the tariffs. We might reciprocate with 20% back to you. Okay, then we'll reciprocate. This is just a mess. So yeah, trade it in any direction you like at the moment. It's moving wildly. As long as it moves wildly, you've got an opportunity to make money. US dollar Swiss sideways totally. I'm long on this. I'm holding this as well, because if you look at it from a higher time frame perspective and where we are at the moment, we've got this low here. So we broke this little high here and retested it. Then we pushed up and we had a new higher low put in. So this area here is kind of weak buying, if you like. We started to rebuy it the week before last, and last week we rebought it again. So I had an exit on this last week at break even here. I was contemplating taking partials off of this, but for me, I've seen this happen so many times, and this is your wick-off style move, yeah, where we have a nice strong push down, we push up, we come down, and we hit a double bottom, and then we take the double bottom out, but not by much, and then we push up and we accumulate. That is a typical wick-off spring play. And it looks really good to me. We've held for 2 weeks. So this low has held for 2 weeks. And it is this previous area of resistance that we broke through and rebought. We're rebuying it. We've got a lovely downward movement, which they haven't really taken much profit on yet. So these propulsion gaps to the upside are upside targets. The danger is coming back down into these propulsion gaps down here. So we are bang in the middle of the range, yeah, which is always a very risky place to take a trade from. But I'm looking for a pullback on that leg, and again, my decision-making process on this is trying to recoup some of this US weakness move that we've had, and where we are now. If we break the high of last week and the previous week, we are going to push up into the monthly lows, which is this propulsion gap. Again, that is around about a 10 to 12% profit. Yeah. So I've got 2 trades on which rely on US dollar strength. Both of those trades will undo pretty much 90% of all the losses that I've taken in March. So I'm sticking with those. There is a danger, obviously, of this one obviously collapsing today on the PMIs, and if it does, it does. Not a lot I can do with that, but this is holding very, very strongly. So even if we do drop down into ADR today, if we, let's say, for example, get negative news on the US and we get a 125 ADR hit, you're dropping into these weekly lows. You can see we've got 3 black lines here. These are weekly highs and lows. These are areas the market has continuously reacted and bought and sold at. There is a lot of limit orders sitting at this level. We can see from the move that they've rebought this propulsion move, which broke the highs. Yeah. So there's buyers here. There's buyers here. I'm long at break even. So if we drop, I've got a lot of troops behind me that are going to rally this, hopefully. If the US numbers are hideously bad, fine. The other reason I'm holding this is because of the Swiss franc. The Swiss reduced interest rates last week, which weakens the Swiss franc. So we don't need much strength on the US to rally this, because the Swiss has got no strength at all at the moment. So there's so much going for this as a long at the minute. Obviously, it's all got to fall into place, but that's the situation at the minute. So there you go. There's all the FX pairs, all covered. Those are positions I've got on this account. And yeah, we'll see where they go. So yeah, ORB, that's a shame, stopped out, but we are just in accumulation at the minute. FTSE's dead in the water. Looks like SIH is going to be a double hedge today. Mind you, look, it's not a double hedge, is it? This just literally, this is broken. I'm at break even. I've been at break even and kind of 1 hour up, 1 hour down for the first hour. So ain't going anywhere today, is it? Dead. Very little movement on anything today. Right, there we go. Covered everything. Lucas, morning. With the new ORB V3 on MQL store available too? No, it's only available on the website. I run your RSI dashboard on 2 separate brokers. Often the difference in readings is significant. On RSI, yeah, if you broke, it's basically all indicators are. An indicator is a reading of price quoted by your broker. If your broker quotes different prices, you'll get different readings. Same as all indicators. If your broker opens at a different time to a different broker, your readings will be different. Your ADRs will be different. Your RSI readings will be different. Your moving average readings will be different. Your CCI readings will be different. Your MACD different. It's all different. Yeah, it's all to do with data. Literally, all you're looking at here, a candlestick, is a representation of price over time. Yeah, and an indicator reads that representation of price over time and plots a line. If that candlestick is different on different brokers, your lines will be different. Yeah. These are not, and this is why we do system parameter permutation testing. This is the key reason, yeah, why I do SPP testing, because I can run a back test on Global Prime, Robo Forex, and DarwinX and get 3 totally different results. Yeah. So if I'm going to take a short when an RSI extension happens at 70 or above, I need to make sure that the system parameter permutation tests work at 65, 67, 70, 73, 75, 78, and 80. If all of those generate a profit, I know that when the market pushes and the RSI extends, I should short it. Which of those I need to use is irrelevant, because it depends on the broker I'm on. Yeah. So if I get an RSI reading at 70.01, I will take a short. If your broker has a reading of 69.99, you will not. If I make 1% on that and you don't, fine. That's it. Trade your charts. Don't trade my charts. Don't trade the guy next to you's charts. Don't trade anybody else you see on YouTube or anywhere else's charts, because you're trading your account, and your account is running off your broker, and your broker is quoting these prices. But you're never going to get the same. If you're on the same broker as me, yeah, on the same account type as me, with the same broker manager as me, you'll get the same prices. But if your broker manager is spreading your account because you're performing better than I am, you'll get different quotes. Yeah, there is no exact thing in trading. Trading is random, and trading is variables. Yeah, it's all about variables. Nothing is ever going to be the same. Everything you do in backtesting, none of it is going to work in the future in the same way as it worked in a backtest, because every candlestick on the chart is unique. Yeah, there has never ever been this price action that you have seen today on a chart in the past. There has never been the exact movement of candlestick price action with exactly the same wicks, exactly the same candle bodies in that order ever. So when you run a back test on this and go, I traded this on the 30-second chart and made 25 grand, You'll never do that again, because it will never happen again. Because your readings will be different, your prices will be different, your spreads will be different. Look at my spread here. If your spread is that quoted price and that quoted price are different, which means that the RSI reading will be different, the moving average reading will be different, the propulsion gap won't be there, depending on the spread of your broker. Did your broker spread you down to here, or did it spread you to here? In which case, then your ADR reading is totally different to mine. Because your broker quoted that price, my broker quoted that price when the market opened and the spread happened. Totally different reading. But we know, and this is all we're doing, this is why I trade the way I trade. I trade loose and fast, because if you try and be exact, you'll never ever win in this game, because you can't be exact. If you could time the market, if anybody on the planet could time the market accurately all the time, they would be a multi-billionaire. They're not. They're selling you courses. And the Bentleys, the Bugattis, and the jets they've got, and the Lamborghinis are all paid for by you buying their education, which doesn't help you make money. Because what they do is nothing to do with what you do. And they don't make money trading, do they? If they did, they'd be trading. And they're not. They're selling you stuff, putting eyeliner on and doing adverts on Facebook. Greg Tucker. Which broker would you recommend for ORB? I'm using Global Prime. Anybody with a tight spread, basically. You're trading 5-minute opening volume. You want tight spread. So up to you. Just tight spread. So I like Global Prime because they got tight spreads. They use MT4 and MT5. They've got good account types, and they do all the indices. So DarwinX, I'm moving this account over. In fact, again, it's on my list to do this week. This is one of the things I wanted to do. I've got to get my money out of DarwinX, transfer it over to Global Prime, get a new account set up in Global Prime, and get this working on Global Prime. So I'm going to be trading SIH on Global Prime as well. Because DarwinX's spreads on the FTSE fine. I have no problem with the DAX or any of the US indices, but the FTSE, the spread is too wide. I'm struggling. I'm getting spread out so much on the FTSE. That's really annoying. Got stopped out on that DAX. Look, that was the stop out on the DAX on the ORB. It's going now. So basically, pick a good spread. Robo don't do FTSE, so I don't use Robo Forex. As the name suggests, it's Forex. So I don't use Robo Forex for anything index based. But Global Prime are good. I'll put a link in the chat. There's a link to the brokers I use at the moment. Again, I switch brokers quite often, because your brokers are going to change your conditions for trading depending on how you're doing. Some brokers actually are not as bad now as they used to be. I think there's more volume of retail traders out there, so they are less picky. But especially with Axie, one of the problems I had with Axie was they really opened the spreads on my account when I started making a lot of money, because they were not able to recoup money taking the B-book trades against my account. It was a commission-free account. Therefore, they put wider spreads on it to make money out of me. And when they do that, you question it, and they go, well, that's just the trading conditions at the moment, sir. Ever so sorry. And you go, okay, well, I'll move my money elsewhere. And they'll go, have you considered a raw account with us? I go, no, I haven't. The spreads are very tight on that. Excellent. What's the commission? Oh, it's too much. What's the swaps? It's too much. So anything you do low time frame, sub 15 minute spread is important, because you're going to be in and out usually fast. Anything you do position trading wise, hourly, 4 hourly, I couldn't give a monkey's what the spread is, because I'm holding the thing for days and weeks. So it really doesn't matter, spread. But indices and also open is you're not going to tell this until you start trading, but the opening spread and the spread 15 minutes after open are very different on some brokers. So some brokers will quote you average tight spreads, but you look at the spread at the open and you can't trade it. So you've got to be careful with brokers, specifically with opens, because the spread is to do with their way of making money at the open, because they're basically taking the price they're quoting you, offering it to a dark pool and getting a requote back from them. So they're getting a quote on a price and they're using that price to spread the market, and they make that much in the middle. When the market is volatile, the dark pools will be feeding a lot of different prices to them, and that's why the spread goes like that. Yeah, news events. Yeah, go watch any news event before it comes out. You see the spread going like that. It's all requotes from the market. The market is putting a lot of money speculatively in, anticipating a move. Therefore, your spreads will vary. So you've got to shop around, but you've also got to trade. Yeah, you've got to do it real, so that you know what actually happens. And demo is not going to tell you that. If you do this on a demo with Global Prime or anybody, they'll give you like 1 pip spread all the time. That is not what you're going to get on a real account. So you've got to put a few $100s in, or pounds or whatever in, and trade it in the real conditions. So no, I tested this to death. The trailing stop on this, every single variation of a trailing stop makes money, and not using a trailing stop also makes money. But the one that makes the most money is the 10% ADR trailer. And it's the one that is the most frustrating, because you get stopped out on 10% pullbacks like that. But when it goes parabolic at the open and doesn't get your target and then pulls back 10%, you're so thankful. And it does that, and it would have stopped you out. Swings and roundabouts. They all work. This is system parameter permutation testing. Again, they all work. Which one you need to use today? I don't know. One of them. How is Zone Trader strategy going? I don't know. I haven't got an account running with it at the moment. That question, Vitaly, is down to you. Where are you placing your zones? It's a discretionary manual trading system, isn't it? So it's going as well as you are placing your zones and the market's moving in between them. My ORB DAX is still trading. Did you break even manual? No. Again, there you go. Silent bull trader. Perfect. Your ORB DAX is still in. Mine isn't. Why? Because your data's different. My broker's different. Our spreads are different. Don't know. Your ADR is different. Yeah. If your ADR is different to my ADR, the range will be different. The trailing stop calculation will be different. Yeah. The reason this operates on ADR is because ADR is a dynamic measurement. Yeah. It changes every day. So if your ADR had your trailing stop trigger there and mine trigger there, you're still in it and I'm not. Other days, I won't be stopped out and you will be. Yeah, it's horses for courses. At the end of the day, the whole system and the strategy works on probabilities and maths. Maths is maths. Maths doesn't change. Probabilities don't change. But price is quoted and price action does. This strategy is not about where price gets to after the open, after a range, after anything like that. This strategy is about how the market gets there. If the market gets from here to here, which is 1 ADR, yeah, like that, everybody makes money. If it gets from 1 ADR, from 0 to 1 ADR like this, yeah, no one makes money. Everybody's stopped out on a trading stop. If you're using a trading stop. If you're not using a trading stop, you make money. Yeah. They all work, but it's not about where it goes. It's about how it gets there. And look at how choppy this is today. Big bull, big bear. Bull, bear. Bull, bear. Bull, bull. Huge wicks. Yeah. Bull, but it's a bear candle, but it's a bull candle. Big bear, wick rejection at the lows. Now we're putting bull in again. Yeah, it's not gone. Break. Boom, boom, boom. If that happens, I'd still be in it. It didn't. So what are you going to do today? Move your trading stop to twice as much as it should be so you didn't have that happen? You can't because you didn't know it was going to happen. Therefore, this is where this time machine comes in I keep talking about. If I had a time machine, I'd have set my trading stop to 15% of ADR and I'd still be in it. I'd also set my partial to there because I think it's probably going to bounce. But no, it's gap fill in it. It's a gap fill today. It's got to be. Also still trading ORB DAX. Cool. Moved partial to 2300. Good. Oh, 2300. There. 23,000. That's there. You're already out of the partial then, I guess. You know, and this is the thing. It's this input here. Your trailing stop, yeah, using an ADR trailer. Mine triggers at 0.1 and 0.1. If you trigger at 0.1 and 0.2, you'll still be in it because it hadn't moved to a 20% of ADR before it pulled back. I'm super tight on this at the moment. You know, so other days you'll be stopped out at 100% loss and I'll be stopped out at 1 ADR at 10% of ADR going, I made money. Who knows? Are you still running the 1 minute? Nope, never have, never will. I've never traded a 1 minute chart in my life. So no, I think you must be in the wrong channel. On Global Prime, do you offer the standard or the raw? Up to you. It's the difference between commission and non-commission. So raw accounts, you tend to get tighter spreads, faster execution, although I've never really noticed a difference. They always promote the faster execution. My EAs execute in sub milliseconds. So you'd have to have really bad execution for it not to trigger a trade or something. But it's the difference between spreads and commission. So on a standard account, you usually pay a commission. I'm raw, but it's up to you. Actually, I don't know if this is raw. It's one of those ways round anyway. So it doesn't matter. I used to worry so much about account types and all this sort of stuff. It doesn't make any difference, really. A lot. There's nothing much I would worry about with it. Just pick one and go with it. Morning, Plowman. The new ORB EA in the tester after I was stopped out like today, it seemed to me if we would enter again, it turns out as a winner. Would be a good option to have a re-entry. Nope. Yeah, it already does that. It's called ORB version 2.7. That's exactly what that does, Peter. The old one does that. But you're looking at one instance of it. Yeah. So again, going back to the way this EA works is it goes, is the 5 minute range any good? Yes, trade it. If that stops out, it will go, we stopped out. Let's look at the 15 minute range. We'll take that. Yeah, so it automatically does it, but it only does it for 5, 10, 15, and 30 minutes. If after that 30 minute, you have been stopped out 3 times on a 5, a 10, and a 15, and then the 30, yeah, stop trading, right? Don't keep trying to take it because it's just going to do that for the rest of the day, potentially. Or it could collapse. If it does, you should have taken it. But unless you can read the future, you're never going to know whether... There's 2 things that could have happened today, right? It could have done that, or it could have done that. It chose to do that today. But if it did that, you'd have been crossed that it took the breakout. It's a 50-50 shot. I go on maths and probabilities. I don't go on what ifs. You can't live on what ifs because there's always what if. What if I hadn't used a 10% ADR trader today? What if I'd have used a 15? First trade with the ORB, $120 in profit. Good job. 5 minute scalpers. 5 minute scalper maybe. on the position EA. Don't know. Don't know what that is. 5-minute scalper. Again, that's on my list to do this week. Is to see, is to look at some set files. I really need to take a month off, basically, and I've got to the point now where I'm doing so much live, so much Discord, so much other stuff. I'm not doing my job, which is developing systems and strategies to diversify my portfolio. And I suffered this month. I didn't. I've recouped all my losses, but I did suffer this month. And I'm suffering because of this. And this is the thing that annoys me, when I suffer because of this and then people try to rip stuff off. I think, what's the point? Yeah, I can sit here and make 6 figures a year not talking to YouTube. Or I can talk to YouTube and have to deal with hours of Discord and support and all that sort of stuff. I'm really weighing up with the what's the point of it at the minute. I don't know what the 5-minute scalper is on the Pills EA, but it's on my list to do. It is on my list. I won't show you my list because it's a mess. But there you go. Get the scalping system together with POS EA. It's 1, 2, 3, 4, 5, 6, 7th on today's do list. Yeah, it's number 7 today. Out of 8. I'm not going to get to it. I can tell you now, I'm not going to get to that one. It's going tomorrow. But yeah. I've got a set files page as well that I'm working on the site. So again, I got to get this site organized. I need an FAQ system. This is something I've really wanted to do for a long time. 7-day trials, demo downloads, instruction video. Yeah, I did this on Friday on how to install the EAs and stuff. I've also got a page like this, which is set files. So every EA has a section of its own just for set files, because at the moment it's in Discord, it's a mess. That is on my list to do. But, you know, it's a week's work just to get all those set files together, test them, put the back test results up, show what the strategies, all that sort of stuff. It takes so much time. There's only me. This is the problem I'm having. I don't have time to do 90% of what I want to do. And then you just think, well, someone's just going to run off with it and flog it. So what's the point? You know. Anyway, right, 9:30. We've got the PMIs coming out for the pound. Oh, sorry, they've already come out, haven't they? 9:39. So the pound, we've got negative and positive. So we're down. That's a good miss on the manufacturing. Unfortunately, most of our export is services, which is up. So probably positive pound movement. So have a look at my pound US, which won't be good. Yes. So positive pound. I'm going to keep an eye on this. Basically, it's ADR today, break even. So I'm looking at Friday's high holding today. I want to see a lower high than Friday put in. Obviously, a lower high than Thursday's 150 ADR. So it's not going to, I mean, it might do that. If we have bad numbers for the US, it might do that. But yeah, not. It's mixed results for the pound. So obviously, there is bullishness in there, but there's also bearishness. So it kind of cancels itself out, although we are more service than manufacturing based. So we'll see. So this afternoon, 1:45 is when we're going to get the movement on the pound, on the US. So we'll see where we go there. Gutted. So just be careful of the DAX, Phil. You're not far away now. There's Friday's close. So that is my partial. Would be my partial if I was in it. Down there. So just be careful when we get to that area. It may blow through it if the market's going bear today, but obviously bear in mind if they are just sorting inefficiencies, they'll be back off from there. If you look at the overall kind of market at the moment, we had obviously the big bear day on Thursday on the DAX, but this is where we bounced. So, you know, we are still holding this bull move. They added more into the bull move and we've gapped up. So there's a good chance that this is going to form your kind of higher high, higher low type move, and then we're going to continue the market rally. So it's the gap fill today is a good target for exit in case that happens. Obviously, it can do either. Anything below 15 is a heart attack territory. Yeah. Believe me, I know Franco. Franco was in hospital, everybody, if you're new here. Thankfully well now. But yeah, or better anyway. Better than being in hospital. I assume you're not in hospital. So yeah, we'll see what happens. Right, that's all I got for you really today. So I'm going to watch this, monitor where that goes. US dollar Swiss obviously is on my radar as well today. So I'm looking for the low of Friday to hold in propulsion. And again, that one, you know, I'm happy to hold that really. I've got less size running on my account than I have in the live room account. So I'm a little bit looser. I'm trying to replicate as much as I can here what I'm doing myself. But I've got less positions on. So my average is still the same, roughly. So, right. And a nice bit of profit on this account this morning as well, at the minute. And it's on the DAX. To move my TP up on that as well. Anybody got anything else they want to discuss, look at, talk about? Any questions on the ORB V3? Sorry, I was a bit negative this morning. I just had one of those weekends where I've been bombarded this weekend, and it just gets you down a little bit. And I've also had so many people moaning at me this weekend about the opening range breakout version 3 and the fact that it's not on the marketplace. I have been through it in the live rooms. I can't get it up there. There's something wrong, and I'm fed up to the back teeth of the marketplace, which is why I'm doing it myself. And like I use the analogy, yeah, this EA is iPhone 16. Yeah, iPhone 16 is a brand new iPhone. It's got a new camera. It's got a new operating system. It's got new functionality that you haven't got on the iPhone 15 or any iPhone before it. Your old iPhones work. Yeah. You do not walk into the Apple store with the iPhone 14 and go, I see you got a new one out. I want the new one for free, please. Yeah, this has been reworked from the ground up. That is why, well, it's not why it's on there, but it's a reason why I think people should stop moaning at me, because it's 50 quid. If you don't want it, your iPhone 14, i.e. opening range breakout 2.7, it still works absolutely fine. You've been using it for years. I've been using it for years with no problem. Just because there's a new one with bells and whistles doesn't mean the old one doesn't work. Just new. That's all. No moaning. I know you're not moaning, Vitaly. Just ADR screen added. Yeah. I can put it in there. You know, I can put the ADR numbers in there. It just doesn't help anybody, because what happens, it doesn't help anybody else, and I can't see how it would help, because it's just data. It's numbers. Yeah, it doesn't, these lines, basically, the way the logic works on it is, it goes, you select 20 to 40% of ADR, right? ADR is 100. So if the range is between 20 to 40 pips, and it's 100 pips, using pips as an example, it will go, the range is okay, we'll take a trade. If it is lower than 20 or above 40, it goes, no, I'm not going to take a trade. You seeing the 20 and the 40 doesn't affect anything. I can understand it being a nice to know, but it's not going to do anything. The EA says okay, or range no good. Yeah, if what you've set hasn't been achieved, it's no good. If what you set has been achieved, we'll trade it. That's all it's doing. Showing you that doesn't change the way this works. And it will not do what I think what you're looking for is I want to see the numbers there and I want to see it go wrong. It ain't going to go wrong. Trust me. I've forward tested it and back tested it for months. I've been using it here for 7 weeks. You can see it here. Look. All of these weeks are all live forward testing with it. I've been trading it every day. It hasn't put a foot wrong. Trust me. It works. But I understand, and I can put it in there. When I buy an EA and create an account with you, do we have an option to add more, remove account numbers by ourselves? No, you just contact me. Yeah. So again, I'm not running any kind of clever system. Yeah. When you buy something, you get sent to this page after buying, and you get an email confirmation if you give me the right email address. Which asks you for your order number, your email, your account name, and your account number, which is basically what appears in your MT4, MT5 terminal. Yeah. And then you send this form, and this form comes through to me. I open up the licensing system, and I add your license in, and then I email you a confirmation that the license is active. So if you want to change your license at any time, just email me using this form, or email me whatever. I will tell you to go and fill this form out, but and then I just change the licenses. Every person in the licensing system has their own line with their account numbers in. If you get to 5 account numbers, I will email you back and say, you got 5. Here's your 5 you got running. Do you want to remove any of those? And you'll go, oh yeah, I don't use that one anymore. I'll swap it for this one. And I'll go, yeah, no problem. And it's done. But it means you never have to pay again. Like with MQL5 Marketplace, when Windows updates, and God, the amount of people that are on dodgy Windows licenses. Right? You know, when you're on a dodgy Windows, well, I don't, because I'm not on one. I never have been. But people have this watermark in the bottom right-hand corner that says unlicensed version, or it says something. It says you need to get a license, or it's expired, it needs renewing, whatever. The amount of people that are on that, who are running dodgy versions of Windows, every time you need to re-roll Windows, which I didn't even know was a thing, but it is apparently, or you update Windows from a minor to a major branch of Windows, it recalibrates your Windows ID, which means it uses a license, which is how MQL5 works. It works on your PC's unique ID and your Windows installation unique ID. Yeah? So basically, if you're on a dodgy and now I understand why people have said, I've used all 10 of my licenses. I'm like, how have you used 10 different computers in 6 months? It's because you're using dodgy Windows and you've got through 6 different dodgy licenses. Well, buy Windows and then you won't have a problem, will you? Anyway, but that's how MQL5 works. My way is on brokers. If you've got 3 brokers, I don't know anybody apart from me that uses more than 5 brokers for one product. If you're trading the position trader EA, yeah, that can trade RSI, it can trade ADR. And it can do manual, right? So let's say, for example, you use RSI, you want to trade H1 on one account, H4 on another account. You're going to run an ADR mean reversion on another account, and you're going to run a manual one. 1, 2, 3, 4. There's 4 licenses for that EA. You've still got 1 spare. So you stick it on a demo and run something else. That's why I give 5 licenses. You're not going to need more than 5. And if you do need more than 5, you're obviously killing it. You've got shed loads of money. Buy another license. It's 50 quid. Yeah? That's why I run the licensing this way. And I'm not automating it because I don't sell enough of them to warrant doing that. It takes me minutes. Every time an order comes in, it takes me literally 20 seconds to press the button. If I'm streaming, obviously I'm not doing it. So I'm only doing it while I'm available on my computer. Which answers my next question. What if in 5 years I'm no longer streaming? I won't be streaming. If you're asking what if in 5 years I'm no longer supplying the EAs, then I'm no longer supplying the EAs. I got asked that question over the weekend. Someone said, so what happens if your company disappears and I disappear? My licenses won't work. No. So what happens if you bought a BMW and BMW went bust? Your BMW no longer works. That's it. So what do? You can buy another one. Yeah. I'm on Virgin Mobile. Okay, Virgin Mobile gets eaten up by O2. I can no longer contact Virgin Mobile, and my Virgin Mobile account doesn't work anymore. Move to O2. Yeah. If I'm not around, it ain't going to work, right? You've lost 50 quid. Seriously, don't worry about it. It's 50 quid. If you can't afford 50 quid, you shouldn't be trading. Unless you've got 5, 10, 15, 20 grand in the bank, you shouldn't be buying EAs because you can't trade. You haven't got any capital. If 50 quid's a problem, go away. Seriously, I'm not joking. I've said this to so many people. What's the minimum balance? Oh, 3 grand. I've only got $200. Right, well then, first of all, you're going to spend 25% of your total account buying one EA, right? And then you're going to put it on an account with no capital to trade. Don't buy the EA. Go and invest in the blackjack table. You've got more chance of earning money on the blackjack table in an hour than you have with a $200 account and an EA. It's 50-50. Go and use blackjack. At least then you can maybe double your account, but you won't, because when you do double the account, you'll be, oh, I'm on a lucky streak. Oh, it's gone. Yeah, this is the real world I live in. If I go bust, I'm not even a business. I can't go bust. I'm here for the long run. Yeah, so am I. Because I've got a mortgage to pay. When my mortgage is gone, right, I might stop doing this. But I'm not going to disappear, right? If you bought, I'm not stupid. If people have bought licenses, I'm not going anywhere. If I was to, I'm not going to stop streaming because I love doing it, right? And I love demonstrating how I trade. And I'm not going to stop selling EAs and stuff because I like it. I love developing them and love the interaction sort of thing. So I'm going to keep doing it. But if I decide not to, then I won't. But I'm not going to turn the licensing system off and just go there. I'm not going to do that. People have bought EAs, and it's going to work. My licensing system as well is built in such a way that if I decided to jack it in, I can flick a switch and everybody gets a perma license. So it's not an issue. I have a backup system which will just make it all work if I wanted to. Because I will retire at some point. Not going to live forever. I'm not going to work forever. Well, I don't know. This is the sort of job you don't really give up, isn't it? But it's $50 US. It's only $50 US. If it works for 1 or 2 years and I'm not here anymore, you can hire someone to code it. Yeah, if you know the strategy. This brings me back to my point. Yeah, people will just rip off everything you do. Yeah, I spend a lot of time doing what I do. Like I said, when I release an EA, people see, hey, he's got an EA out. What you don't see is the 6 months of failed strategy development, permutation testing, programming, development, diversification, retesting, more strategy testing, multiple instrument testing, time frame testing, everything else that goes into it, bug testing, bug fixing, forward testing, yeah, that goes into going, I've got a new EA out, yeah. Opening range breakout EA has taken more than 3 months of development, coding and testing. And if you've been in the member streams, you've seen me doing it live. Yeah, it's 50 quid for 3 months of my life based on 18 years of my work. And people are moaning at me because I can't get the update on MQL5. Oh. Get it or don't. I don't care. Sorry, not being negative, but I really don't care. If you're moaning about 50 quid, it's just the wrong place to be. You need to be in McDonald's or something, right? No stress, no pressure. This is a high pressure, high risk job. It's not for people with $200 in the bank. Seriously. If I was one of the YouTubers flogging one of these with tattoos and gold chains around my neck, I'd be telling you, yeah, you can make £1 million on $200. Give me $1.99 of that, and I will show you how. Good luck with your $1 trading account. EA makes money, therefore I make money. You are gone, license is gone, EA is gone. I am not making money. That's true. Absolutely correct. But you got to me via someone else, didn't you? So there's other people out there making money. You just got to find them. But you know how to do it, Vitaly, don't you now? because this strategy that I have here, I've developed it and I've shown everybody how it works, and it's not a secret. It's been out there for a long time. Like I say, Tony Crabell made this strategy over 20 years ago, and it still works today. Why? Because traders make the market move. If the market moves, this works. It's a breakout strategy. Simple as that. Yeah. All you're doing is you're bracketing a time period based on volume and volatility. The thing that people don't know is how the loss recovery system works. Yeah, and that's one of the reasons I haven't released the exact logic and maths of how that all works, because if I do, people are just going to rip it off. And I spent a long time developing that. But that's based on my experience. Yeah, that's based on how I trade and how I would adjust my risks based on what the market's done to my account. So that's based on experience, the way that the logic works. But the logic's not necessarily going to be right either. This was wrong today, wasn't it? Look. Wrong. Should have taken that. Yeah. And again, if you today set your EA to 0.15 instead of 0.2, you would be short on that now. And you are in shed loads of money, which is good. We all love you, I know. Given so much knowledge over the years. I'm not going anywhere, Chris. I'm not going anywhere, don't worry. I'm just going to change the way I do stuff. That's all. There's ways to teach, there's ways to give information across without giving away all the information. That's all I'm sort of saying, yeah. One of the guys that I used to have in my group a long time ago, this is going back a long time actually, years, he was one of the most active members in the group. And then someone said, have you seen his website? And I was like, no, what website? Didn't know he had a website. I went on the website, literally the Bootcamp recreated in PDF form and website form with a product that trades exactly the same way as the market reverse alerts indicator and all of my indicators do, operating on this website for $200. Yeah. 3 times the price that I charge for the original one. 3 times the price. Yeah. Completely. All the terminology exactly the same. Everything I teach, my wording, the way I explain things, my theories, everything. Yeah. So that's why I'm always cautious. When anybody is over helpful in the Discord group, I'm like immediately like almost on the verge of kicking people, because I know I've been through it. I've been burnt. My spider sense tingles and goes, you're getting too involved in this. You're not there to help people. It's very few people are there to help people. Most people are there to make money, aren't they? That's the thing. You'll learn that when you've been in this thing for a long time. The best place to learn that is to go here, right? And go into the trading system. You'll see the same names coming up in here for years and years and years on end. Him, Emmanuel, for a start. Know him. He was there 20 years ago when I was in here. And there's many other names that you see coming up on here. And when you actually look at these people have tried and failed many times to set up commercial websites with systems and strategies, and they just system hop, trying to basically pass the same information on over and over and over and over again. But it's never going to finish, is it? It's never going to stop, because that's what we do as human beings. We pass information on. That's how evolution works, isn't it? Yeah. The only reason we are evolving faster in our generation than any other generation before is because we invented the computer, and the computer can retain information, which means that all generations from now on will have all information at hand forever, which means that you exponentially grow, which is what AI is doing, isn't it? And again, I saw the other day, an ADR based strategy called ADR AI. No, was it AI ADR? AI. They basically made an acronym of ADR and AI, ARDR or something like that. Yeah, I didn't invent ADR. It's the ATR indicator. I didn't invent it. I just used the daily version of it. That's why it's called ADR. But they made an AIEA, right? AI cannot access the internet. Don't know if anybody knows that, but whenever you're using AI is not allowed to access the internet. So how can you have a trading system without access to the internet? it cannot access recent information from 2023 onwards. Therefore, it has no idea what the market is doing now. So how can you build something based on current trading conditions that cannot see current trading conditions? Anything with the word AI in it to do with trading, run. It's not AI. There's no such thing as AI in MT4 or MT5. It doesn't exist. It's all smoke and mirrors and bullshit. There's so much of it out there. Loonies. Don't retire. I will retire at some point, but I reckon I'd be the sort of person that retires at 75 when I'm forced to retire because I can't see the screen anymore. I'm up to a 42-inch monitor now, so I think I can go 50, maybe 60 before I have to retire. But you don't retire from making money, do you? This isn't a job. This is not a job, is it? This is... I'm not doing it. This $544, I haven't done this. The EA did it. All this money, 8 grand. I didn't do that. The EA did it. Yeah. You don't retire from this. This is just something that happens, isn't it? You place money in the market, you use it to make money. I don't think I'll ever retire. I will retire from doing this sort of stuff, some streaming and stuff at some point because, you know, I want to, but I don't think I'll ever retire from trading. I don't think that's an option, although my wife would love me to. When am I thinking of retiring? Oh, I'm not. When you are thinking of retiring, have an option to buy a permanent license for $100. Well, like I said, I can flick a switch anyway. So, you know what I would probably do when I retire is just basically release the source code. It'll be out there anyway. Hackers will hack it. They always do. That's the other thing that annoys you. Like the market reverse alerts indicator. You know, I spent a long time designing and building that and fine-tuning it. Within weeks, there was a rip-off of it. You know, because well, they claim they hacked the code, but they didn't. What I did was release a video which explained exactly the logic. So someone just coded the logic, which is fine. But you don't call it the same thing. Rename it and repackage it. There you go. Now I've given everybody an idea what to do. I'm sure while in Greece on your yacht, you can roll over and press a button. Yeah, I don't have to, though, because my trading is on the VPS in the cloud. So I can be on my yacht in Greece and not even need to press a button. Brilliant, isn't it? What's my risk on ORB? Good question. 1%. So this is... it's 1% with a caveat that this isn't my account balance. Well, that is my account balance, but it's not my full account balance. Yeah, so it's risking 1% because I want it to be risking 1% of roughly 20 to 30k, and then I can top up if necessary. If you look at the drawdown, if you do backtest with the EA set files that come with the EA, you'll see that the drawdown, so all the EA set files are based on a $50 risk. Yeah. Let me load one up. So all the EA set files are based on a flat $50 risk. Okay. So I based all back testing on flat rate so that there was no deviation based on account run up. So if you run an account up really fast, your risk exponentially increases. If you hit a rough spot and you're using any kind of lot multiplication, loss recovery, you can exponentially drop immediately. If you use a $50 risk, standard risk, you get a nice smooth equity curve because you're risking the same amount, and it doesn't matter whether the market's volatile, whether it's contracted, whether you're having a winning run, whether you're having a losing run. It just shows you, if you just put $50 on everything, what's your equity curve? Did it come out with a positive alpha at the end? Yes. Brilliant. That's all we need to know. So all of the back tests are over that. So what I've decided to do is use 1%, but that tells you what the drawdown is. Yep. So on that $50, you'll be drawing down somewhere between 2 to 5k. Yeah. So on this size of account, I would be drawing down probably somewhere between 10 to 12k. I would totally expect to see a 10k drawdown on that in a year, but it would return 30 to 50k. So you can test it, but I just go with the 1% at the moment. But you can risk whatever you want. But it all depends on your personal circumstances. I don't have all of my money in all of my trading accounts, so it's a case of I can top up when needed. I have other accounts, so I don't necessarily need to withdraw either, which means that you can compound, which is probably what I will do with this, to be honest. I will compound this account, and then I'll just basically shut it and take it out and then start again. But up to you. Backtest it. Yeah. So when you're backtesting, the reason you should backtest ideally with a fixed amount of money. Let's say, for example, you test with $100 risk, and that $100 risk. Let's do it actually. Let's do a quick test. Let's just load the NAS set. You working? Yeah. So you'll see what the drawdown is, right? So from the high there, we had a drawdown there of about $500. So you're about 11,500 down to about 10,700, so about $800 a drawdown there. Yeah, so we're risking $100 a trade. We've taken an $800 drawdown roughly. We're up to $2,500. Yeah, so we've made 2.5k. We've made we're 13k now, nearly 14k. So we've made 4k. We've drawn down 800. So if you started with a $1,000 account right now, you'd be up 4k, risking $100 a trade. So you don't need more than a $1,000 account. But when you get to the end of this backtest, it will give you a maximal drawdown. So that maximal drawdown is based on $100 risk. So when we get to the end of this test, if the maximal drawdown is $3,500, for example, right? That says if I had $4,000 in my account, I wouldn't have blown it, risking that much, and I'd have made X. If I want to risk $200 per trade, I would have needed 7k. If I want to risk $300 a trade, I'd have needed $10,500. If I want to risk $400, I'd have needed 14,000 in my account. Yeah. So if you want to risk $500 a trade, you're going to make 5 times the profit than you would on this test, but you're going to take 5 times the drawdown. So this test is 1,035 is the maximal drawdown. So risking $100 a trade, we made $5,159. We drew down by $1,035. So at $100 a trade, I needed to put $1,200 in my account margin, probably more, to make 5k. So the return on drawdown is roughly 4R. So that is my risk. That is my return. So I've got a 4R risk return on drawdown. So if I want to instead make 20 grand a year, what I need to do is risk $400 per trade, not 100, to make 20 grand a year. And that was a year test I just did. But I'm actually going to need to start off with a $5,000 account. So I'm going to need to put 5 grand into my account. That is going to turn into 20k, which nets, which you know, that is what it's going to make. That's one instrument. That's just the Nasdaq. Yeah. Don't forget we got the Dow. the FTSE, the S&P. Yeah, so this is just the Nasdaq. So you're going to make more because you're trading more instruments. If this had worked out today and the FTSE had slightly wider range today, we'd have won on both of those, wouldn't we? Yeah. So you can work out the maths. If you want to put 100 grand in there and risk $2,000 a trade, you're going to make a lot more money. But if you put it on 1% risk, right? So let me run this exact same test now on 1% risk. So, sorry, probably my broker moaning at me. So yeah, we run it on 1% risk. You'll see that the swings on the P&L will be more. They'll be it's more wild because the more risk you take, if you go into a strong drawdown period, just as you've ramped up the risk, because you've had a few losing trades, the loss recovery system's kicked in if you're using it. When you hit that drawdown period, the swing will be bigger to the downside. Equally, if you have some drawdown that goes against you and you land one of the biggest trades of the year after you've had 5 losers on the trot, you're going to be having bigger risk on that, and the swing to the upside will be much bigger. Yeah, which is why percentage risk backtesting adds another variable, which isn't a constant, which means you get less reliable forward test results. So I always like to test with fixed risk where possible. But when live trading, I want to risk a percentage of what I've got. But you have to have in the back of your mind, if you get a losing run, that is going to be drawn down into. So it's a more risky way of trading. But you can see we're up to already 20K. So we've doubled the account already, because this was starting a 10K account, this one. It's using 1% risk. So we've doubled the account. It's drawn down now by over 2 grand. So our initial drawdown, remember, was only 1,000. Now we're risking 1%. We've actually taken more than 2. We'll see what the test says when it finishes. But so we took $2,600 a drawdown, but we made $9,950. Yeah, instead of 5. So we made twice as much money, but we took just over. We took 2.5 times the drawdown to make twice the return. So you're not going to get exactly the same metric using percentage risk, but your risk will scale with your account size. But you're not going to get exactly the same. If you went from $50 risk to $100 risk, you would get exactly the same. You get double that exactly and double that exactly. With percentage risk, it depends on when the winning and losing trades arrive as to how the P&L pans out, which is why you shouldn't backtest with a percentage variable. You should backtest with a flat variable. You need to remove variables in trading, which is, and again, the contradiction there is ADR. When I trade, everything I do is based on ADR. And what is ADR? A massive variable. It changes constantly. All the ADRs in backtesting that have been used to generate that equity curve are never going to happen in that order again. It's a variable. But then again, fixed pips is also a variable, because if you use a fixed pip stop loss and take profit, the market becomes the variable. There's always a variable because the market is never the same. So either you make the variable your risk and percentage, or you make your stops and take profits fixed and let the market be the variable. But there's no right or wrong way of doing it, because it is a variable. Everything is a variable in trading. Nothing is consistent. Nothing is static. Nothing works forever. Yeah, look at the period of stagnation. Stagnated there, didn't make any money. Wicked. Nice. Stagnation. Bit of a jump up. Stagnation. Bit of a drop. But we're not looking at making that. You can't make that without risk that will blow your account. Yeah, this is why everyone goes, that's what they want. That's what they want in prop. This is what happens in real life. Yeah. If you showed any prop trader that P&L, they'd go, I can't live on that. What you mean? So I'm going to take 2.5 grand a drawdown and I'm only going to get 10 grand back in a year. But no one makes money in prop consistently. This does. This is why traders trade this way. And traders trade with their own capital, because I can 5x that, but I'm going to 5x that. So if you want to make 5x that, you want to make 50 grand a year on the NASDAQ, you're going to need 10 grand in your account. If you're buying an EA for $50 and you've only got $150 left in your account, you ain't going to make 10 grand. Fact. It's not going to happen. Yeah. Capital makes capital. Money makes money. It's been a term that's been used in business for years. Money makes money. This is trading. Money makes money. You don't have money, you don't make money. And this, this is what backtesting is about. It teaches you the real world. It teaches you what is possible and what isn't possible. Anyone can make an equity curve like that. I've got a strategy that was given to me by one of the guys in the group. Yeah. Looks amazing. Until you do long-term backtesting and you realize the pitfalls in it. And it blows the account every single time. But over a short period of time, it will make a lot of money. But it will blow the account at some point. But it's a really good strategy. And it's using the position trader EA. Yeah. But it's got a negative 10R risk reward ratio. Yeah. So it's risking $1,000 to make $100. Yeah. Negative 10R. It's a scalper. So these work all the time until they don't. And when they don't work, you die. And there's nothing you can do about it. It will blow the account. So it's something that works on prop short term, but it won't work long term. And it just, it's great at printing money, but it gets stuck like this, right? So now I know what's going on in the background here. This thing is stuck in drawdown. Yeah, it's stuck in drawdown here. Can't get out. It managed to just get out there and made another equity jump. But the drawdown taken on that there was roughly $150. Closed drawdown. Open drawdown will be 5 times that. So that would have drawn down by probably $600, $700, $800. And you can find this information out because in the EA, you've got a setting to export daily data, which exports your open. And this is one of the reasons the position trader EA has that functionality to export data on a daily basis. So it exports a spreadsheet to your computer, which shows you your open P&L and drawdown. So it shows you the open drawdown. That's the important part. Yeah. On the P&L, it might say your maximum drawdown was 537. Yeah. But that was when it closed all those trades out. Yeah. If I went into a position for 10 positions, right, held them for 3 months and then closed them at break even, it would show you the drawdown on the worst trade. But it doesn't show you the total drawdown on everything at that point, which is the highest point. That will be 10 times what that figure is. So it's made 290 with a 83% strike rate. Fantastic. But you can't see that it drew down by 5 grand, 50% of the account to make $290. That's not very nice, is it? But the equity curve looks good, doesn't it? Not in real world. Half the EAs you see on the marketplace are doing this sort of stuff. And they will work short term, but they won't work long term. Damn. We hit ADR. This pound is reacting. The US dollar is dropping at the moment, possibly ahead of the PMI figures. Hedged on both today. Not a 100, but a 100K. That's retirement if you get 10 people to buy it. What? Somebody contacted me the other day in a Discord, and I was flabbergasted. I can't remember who it was. I think it might have been one of you guys, and it was whether it's a member or not. I can't remember who it was, but they said they bought an EA for $1,000, and I was like, "What? Why? Who? Why?" Instant, just I can't remember who it was, but because they're asking about licensing and things. And I assumed that those EAs on the marketplace for $1,000 were there because they didn't want people to buy them. So you place an EA on the marketplace, you price it at $1,000 in the knowledge that no idiot's going to pay $1,000 for the EA. But here's my signal on the marketplace. Come and follow my signal, because signals will die on those sorts of EAs because they bust all the time. It's the same as that one I just showed you. It will go like that and like that, like that, and then it will go like that. But he bought the EA for $1,000. And I've tested some of those EAs for $1,000 in the back tester, and they all blow the account. And when you say to the vendor that blew the account, they turn around and go, you're using the wrong settings. So what are the settings? Hang on, let me get you the latest set file. And what they do is they basically back test for the last 3 months, because they know that most people can't be asked to go back more than 3 months in a back test. And they'll find the exact settings for the perfect equity curve. And then they'll say, these are the settings that we're currently running on the signal, which is brilliant, because what they're doing is they're curve fitting it to the current market conditions. And then when the market conditions change, it blows the account and they go back to square one. But somebody bought one of those. I'm shocked. But I've back tested it and it doesn't work. But anyway, I can't remember what my point was. We were talking about retirement. Oh yeah, so get 10 people to buy it. So the point of those EAs, I think, is they want you to get their signals for $30 a month, and they get 50 people following that signal for $30 a month. They just milk it while it's working and they kill it. But some people will buy it. Can you imagine selling 10 EAs at $1,000 every month? I wouldn't trade anymore, would you, if you're earning that sort of money? 10 grand a month just from people buying EAs? Anyway, but apparently people do buy them. I just wasn't aware they did. So $50 for 5k is too much. 25 would be better. No, $50 for 5k is no. So the $50 flat risk test that I just did generates what it generates. Generated 5 grand's worth of profit. If you're not happy with that and you only want 2.5 grand, use $25 risk and you'll only get 2.5 in that back test. I don't know what's going to happen in the future, obviously, but that's what that back test showed. Am I missing something there? I'm not quite sure I understand. It's to do with drawdown. So the risk is, what I was saying was, if you test with $50 risk, what the test will do is it will show you in that year what you would have made as profit and what you would have drawn down into the account by. Yeah, so the drawdown, the maximal drawdown, is the worst case scenario, and the profit, net profit, is what it generated on top of the account balance. So it turned a $10,000 account into a $19,954 account, and it used $2,600 of that 10 grand to generate that profit on 50, right? So if you say, I've got a $1,000 trading account and the drawdown is $1,000, you can't risk 50, because at some point in the past, it drew down the entire account. So if you drop it to 25, it would only draw down half of the account. Yeah, so that's what the back testing is for, is to show you it's to stress test it. It's to show you the extremes. So I want to risk $25 a trade. What's the worst case scenario over the last year? It was 1,000. It lost 1,000. Okay, so if I stick 5 in there, I've got a buffer zone of 4k. So I can risk $50. You're going to be really safe. If you've got $1,500, you're cutting it fine. You might want to drop the risk a bit. But if you use a percentage of your account, it will risk in proportion to the account size. So if the test shows that on a $2,000 trading account, it drew down $2,000, that's 100% of the account, isn't it? So you know that that risk is too high. You need to reduce it down, or you need to start with a larger account, one or the other. But again, the caveat is this is a back test based on historical information. If historical information doesn't repeat itself in a similar form in the future, that is a moot point anyway. It might have a terrible year. And, you know, that strategies do have terrible years. Markets change. We could be going into a bear market now. If we go into a bear volatile market, you're going to get a different result to if you're in a bull calm market. But no one can tell us what the market's going to be in the next 6 months because it's the future. Backtesting. But this is why you stress test and you variable test and you system parameter permutation test. So I've tested all the different variables, and I do with all of my EAs. So I tested a trailing stop of 10%, 15%, 20%, 25%, and 30% of ADR. I've tested whether I should start trailing at 10%, 20%, 30%, blah, 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 blah. I've tested whether I should use a 10% stop loss, 5% stop loss, a 15% stop loss. I've tested whether we should be using a 10, 20, 30% of ADR, 15%, 5%. And it shows you every single permutation of the strategy. And it shows you what the outcomes were. And it tells you what works and what doesn't. But it tells you what happens if you do this. If you use tight ranges, you get stopped out. But the winners are huge. If you use wide ranges, you don't take many trades. But the winners are small but consistent. If you have something somewhere in the Goldilocks zone, typically 20% to 40% of the average daily range at the open, you get a nice consistent equity curve. Like this. But equally, all of the other variations work as well. But the results are all different. But if they all work, it doesn't matter which one you pick. Like you guys today, well done. Me, no. Why? Different set file. But tomorrow, me, happy, you, sad. Me with a time machine, happy every day. Won't be here. I'll be in my DeLorean. When you backtested RBV3, did you consider time zone shifts? No. Because it works on volatility at the open and range at the open, if the time is shifted, you're not going to have the volatility at the open, therefore it won't take any trades. Doesn't need to be, does it? So like at the moment, it's the open is at 11 o'clock, but only for 3 weeks. The rest of the year it's 10 o'clock. So I tested it at 10 o'clock. So for the weeks where it's 11 o'clock, it would be starting to trade here. There, yep. So if there was enough range there to form a decent range, it would have traded it. But yeah, the results might be different for 3 weeks. But you could find out when all the clocks changed and when your broker changed, and you could run separate tests. So you could run 2 tests a year instead of 1 if you want to. But for me, it's 3 weeks of the year where it's going to do something different to what it would do. It's not going to be the end of the world. So I'm not worried about it personally. But you could run different set files, but it doesn't take that into account. You have to adjust it. My risk level taught to me, if you can't sleep, the risk is too high. Yeah, exactly. That was exactly what was taught to me. If you press the button and you immediately are worried, you're overexposed. Yeah. So if you press the button, or an EA presses a button and it moves there straight away, and that scares you, whatever that number is, over leveraged. You should be able to press a button in your trading chart and use event hit, and it goes skyrocketing against you. And worst case scenario, you might have 1/4 to 0.5% of your account at risk if it went skyrocketing on a news event in the opposite direction. Anything more than that, you are over leveraged, and it will not work long term. I've had that proven to me over and over and over again. And then the answer is always, yeah, but when it works, woof, woof. Yeah, but when it doesn't work, woof, woof. 50-50. Yeah. Capital preservation is rule number 1. If you don't have capital, you can't trade. If you get the woof, woof that makes you a load of money, well done. If you get the other one, that's the end of your trading career. Off you go, fill out the McDonald's form. They're hiring, because that's where you're going to be, because you haven't got any capital to trade with. So go and get a job. Do you want to get a job or do you want to be consistent? Most people are doing this because they want to give up the job or at least have an income alongside the job. That's why we do it. Yeah, someone's selling EAs like 10 to 15 of them. They have a new set file every year. Yeah. And for each pair, yeah. So this is the first EA that I have released where I am using a different set file for every instrument. So with this one, when you download this, you get different set files. So there's a different set file for each instrument. And it's the first time I've actually gone down this route of having different set files. They're very similar, but they are slightly different because each of these instruments has a slightly, unlike forex, every forex instrument moves on fundamentals and economics. Therefore, they have their own characteristics, but the characteristics are all controlled by the same thing. With the stock indices, they are their own beast in the fact that they have their own kind of personalities and the ways they move because of the number of stocks in them and the types of stock sectors that are in them. So the NASDAQ tech stocks are hot. They're fast. They move with big candlesticks, very quick, lots of wicks everywhere. Yeah. The Dow Jones is 30 industrial stocks with high volume caps. Yeah. So, or high capital stocks. So they move much slower, but the candlesticks are less wicky. So you need a slightly different mechanism at the open and for trailing them to each individual index. So on the DAX, that's a 0.2 with a 0.1, 0.1. On the NASDAQ, it's a 0.2. Oh, that's a 0.1, 0.1 as well. That's getting out at half with 3/4. I don't think I've loaded the set files onto these actually. Oh, that's why you guys might be out, because I've actually updated my EA this morning. I haven't reloaded the set files, have I? That's why. Yeah, I need to change these. But yeah, but they have got slightly different variables in them. Let me load. So that's the NASDAQ, wasn't it? So the NASDAQ is 0.2, 0.1 on the trailer. Yeah. So what it does is it trails at a further distance, but it gets into the trailing mechanism fast. So when it's moved 10% of ADR, it then starts to move the original stop. Yeah. So if we get a big fast open, we protect it quickly. Yeah. Because there's a high probability of it spiking out very, very quick and going the other way very fast. It moves very, very quick. There's 100 stocks in there, and they're the 100 hottest traded stocks on the planet. Yeah. So when you look at something else like the Dow Jones, yeah, that trailing stop is the opposite. So it trails it close to current price, but it starts trailing it later. So this one, it trails 10% of the average daily range, but it doesn't start until we've moved 20% because the candlesticks are a lot slower and they are a lot less wicky. So we are moving slower, so we trail slower. But we trail closer because it doesn't wick out as much. So it means we can lock in safer. Yeah. And it's just the way that they move, the mechanisms that they, the stocks that they're trading, the sectors that they're trading in are all different. So, you know, that's all it is. But the underlying strategy is exactly the same. The volatility comes in at the open. We need some volatility. And 0.15 is also another good range to use. So if it's opened with 15% of the average daily range, that works well as well. A 15% trailing stop works as well as a 10%. But, you know, it's just different days. So, you know, there's a million variables, like with everything. But all you can do is test it to death and pick what works broadly, and then slight tweaks on each of them, which is all that this does. But the loss recovery mechanism is a bit more complex in the fact that it's looking at recovering your losses as it goes. So it needs to log in all that information. It needs to look at what your starting balances is on a daily basis, and yeah, it's more clever, if you like, in the fact that it will apply the throttle and decelerate depending on how the market is moving at the moment, and that is dependent on each instrument. So if the Nasdaq's going mental, and every day it's breaking out and just making money, it will not adjust that risk. If the Dow or the DAX is stuttering at the start for days on end, it will adjust the risk on the DAX, but it won't adjust the risk on the Nasdaq, because it will be expecting a large volume break. Because when you get contraction in stocks, it's usually because there is a move coming. So when that move comes, if we've been losing money, we're going to make sure we get it back quick. And as soon as it's got it back, it goes brilliant. But it will only do that if this is not paying. If this is constantly making money and it's making more money than this is making, it will adjust the risk on this in a different way. So it's clever. It's got an intelligence to it based on the portfolio as well as the individual instrument, which is why I've called it a loss recovery system. It's a lot multiplier, but it's not just a lot multiplier. There's a lot more cogs going on. But, you know, this is what strategy development's about. You know, that's not a 5-minute job. That took weeks to develop that. Weeks of testing, and then forward testing, and then MT5 testing to do portfolio testing, then analysis of that, and then tweak it, and then do it again. It's just time. It takes so much time to get it to a point, and then all of a sudden the market will just go, yeah, I'm going to do something different. Lee, your kids are growing. Are they showing any interest in Daddy's video game? One of them did for a very short period of time. And you know what? I made him money. He made himself money. I said to him, I sat him down in front of the chart with the price action toolkit. And I said, when you think it's going to go down, press that button, press the red one. And when you think it's going to go up, press the green one. And I went back in an hour and his P&L was up. I think he was 8 or 9 at the time. Maybe a bit older than that, actually. Maybe about 10 or 11. Can't remember. But it was a curious little experiment for me to see whether or not he would get it. And it was fun. It was something to do. It's like, oh, I can make money. And he did. He made money. But he's not got any interest in it. No. And if they did, I would tell them to go and do something else. Because it takes... When you're young, right? When you're 18, you want to make money. And you're always looking for the fastest, easiest way. Because work seems like a bit crap, doesn't it? So this looks like a fast, easy way, because these guys with gold teeth and chains and Lamborghinis are on YouTube doing this every day, and they're making thousands. No, they're not, but they look like they're making thousands. So I'll have a go at that. What the guys that are doing this have done is spend 10 to 15 years of their life studying market movement, understanding how it works, and understanding the correlation between indicators and price action, to figure out how to extract money from a random moving object. When you're 18, you can't put your life on hold for 10 years earning no money while you're learning how this thing works and losing a few accounts along the way because you haven't got any money because you're not earning before you start to make money. I can teach him everything I know about trading. He will still need to make all the mistakes. Like I can teach everybody everything I know about trading. And then still people blow their accounts. And they're like, I said, why are you doing 0.5% risk? Well, because it worked well in backtesting over the last 2 months. That's not what I told you to do. Yeah. So you may have learned everything, but you've applied it completely wrong because you think you know better. And then the market teaches you, you don't know better. I think I know better sometimes. And then the market turns around and says, no, you don't know better. I know how to recover from not knowing better. But that's because I've not known better a few times and been kicked in the arse, and you learn how to recover from that. And that's all about, you know, all these things are learning experiences you don't get taught until the market kicks your ass. When it kicks your ass, you change. You do something slightly different. And that's, you know, you can't teach that. And an 18-year-old is never going to get it. Yeah. When you go into a bank, the bank sits you down and says, watch this ladder go up and down. If you go into a trading desk, if you're lucky enough to be one of the 1,000 that gets accepted onto a trading desk, they sit you down and they make you watch the ladder go up and down for 2 weeks. You're not even allowed to touch a keyboard. Just watch this ladder go up and down, right? Burn that into your brain, and you end up nodding in your sleep. And then when you sit down at your desk and they say, here's $10,000, I want you to return me $10,100, you look at the screen and you go like that, because it's burnt into your muscle memory how it moves, and you just make money. But the only reason you do that is because you've spent 2 weeks, 8 hours a day going like that. Mind-numbingly boring. But this is how you burn muscle memory. The best way to do it in the real world is to open the strategy tester up, stick it into visual mode, and press the start button. Yeah, you're going to watch months of price action fly past your eyeballs. Yeah, you're going to see the same thing happen over and over and over and over again. Yeah. This is the easiest way to speed up your education, is do this. Because when you see it doing this, you see it go up, and then you see it go up again, and then you see it come down, you go, well, this just keeps going up and down all the time. So what do? When it goes up, you sell it. When it goes down, you buy it. And you just keep doing that. Yeah. If you're looking for the holy grail of indicators that says that when it gets to this line, it goes above it by 5 pips, and you see this candlestick and it must have a wick of 16%, and it must be an ADR above this, and you must have a moving average above it, then press the button. You'll never, ever make money. Because when you do that, it will go against you and it'll stop you out, and you'll go, that doesn't work, and you'll hop to the next strategy, and you'll keep doing that for the rest of your life. Doesn't work. Just goes up and down. We're long at the moment. If it goes down, we'll buy it again, we'll move our price and wait for it to go up. If it doesn't go up, it's going to go sideways. It's not hurting. The drawdown is nothing. It's just going to sit there. It's going to go sideways, and it will go up or it'll go down. When it goes up, we'll make money. When it goes down, we'll change our price. There we go. Now we're going to change our price. Now we'll wait for it to go up again. We'll keep doing it. We'll keep doing it over and over again, because that's all it does. And this is what they teach you in the banks. Yeah. There is strategy, but the main teaching is risk. You get in with tiny amounts so you can survive. That's it. Tiny amounts. It's not hurting. Yeah, let's move the price down and wait for it to go up. So what you got to do. Now the price is here. We started with our price here. Didn't work out, so we've moved our price to here. So we just wait for it to go up here, and then we'll close it. What it does. Burn that into your brain, you will make money. But if you go in with 2% risk every time you press the button, you will blow your account over and over and over and over again. If you go in with 0.5% of risk over an ADR of movement, you will blow your account over and over and over again. Just will keep blowing, because that's what it does. Don't worry about the ADRs here, because this is running some weird strategy. Which kind of works, yeah. But like I say, this has got a 10R negative on it, so it's going to work, isn't it, for quite a long time, and it will work. It does work. It's beautiful until it's not. When it's not, it's dead. That's my problem with this strategy. But this is for anybody you in the Discord. This is Harold's strategy that he was posting P&Ls about, but it's you ran this on all 28 FX pairs, and I have. It blows every time. Blows every single time. But it survives for a long time without blowing. But for a prop strategy, you wouldn't be able to get it on, I don't think, because they have adding to losers. So you've got to find the right prop strategy for it. And it's low risk, so it's low return. And it, when the euro pops, it dies, unfortunately. But that's all it is. That's the market, isn't it? This is what we trade. We trade price movement. Yeah, it's binary. Can't do anything else but go up and down. So all you've got to do is stay in the market. That's the job. You can't predict the price movement. You can't predict the distance. You can't predict the timing. You can't predict anything, because it's not in your control. The only thing in your control is risk. So you apply risk in a comfortable manner and you wait. That's it. And that's all I told him to do. I said, when you see it going up, I told him what I gave him was a stochastic. Actually, no, what I gave him was my multi-time frame stochastic indicator. This one. This is what I gave him. Yeah. So this basically is, it's got 4 stochastics on one chart. And basically I said, when they all get over the line, sell it. But press the red button. When they all get below the line, this is on a 1 minute chart, press the green button. That's all I told him to do. And what's this doing? Yeah. It's just going up and down. Children can do this. And like you say, it's a video game. He was playing Roblox. He was playing Minecraft at the time. So he wasn't playing Minecraft. He was playing snakes. I'm pretty good at it as well, unfortunately. Which is kind of, that was his trading course. I'm going to get him to sell that. I might as well get him to package up and sell it for $1,000. Someone will buy it. Anyway, I'm going now. I've got work to do. 10:45. Is anybody still here? They are still here, look. So I will be back next week. So this week I'm going to focus purely on getting stuff done. So SIH is on my list. POS-EA, I've got amendments to make to that. I've got website stuff that I need to get changed. And then I'm going to come back with a new live schedule, which is going to be twice a day. The member stream, I'm undecided what I'm going to do with that at the moment. I'm unsure what I'm going to do with that part at all, to be honest, at the minute, because I've given all the content I need to give out. So members aren't really coming with too much, which is understandable because they've learned it all, of stuff to do in them. So I'm kind of floating around going, well, what should we talk about today now? Because I've talked about everything. So that's what my plan is for this week. And then focusing on that new breakout strategy and getting a lot of fine tuning done on that. And then, I'll see what I can do with the ORBEA and maybe put the ADRs in there as well. So that's my thoughts for this week and what I'm going to be doing. Just bear in mind this week is a little bit quiet until Wednesday. So Wednesday's potentially, I don't think it will be, but we didn't think Liz Truss and Kwasi Kwarteng were going to blow the market up either. And this is a new government, first budget. There is potential for, and that's what Liz Truss's was. Yeah, this is how we're going to do things now. They are doing the same thing, Labour, this time round. So you've got to be wary of this, which is why I say pound, probably try and get as flat as you can, just in case. But it's all quiet until then. Afternoon PMIs for the US, and then we're through to Wednesday. So I will be in Discord. So anybody's got any questions on or anything, fire away in Discord. Anything that I spot, I'll be posting, or anything interesting that I see happening, I will be posting anyway. So I will still be here. I'm just not live here. All right. So have a good week. Anything you need, let me know. Other than that, I will see you next time. Have a good one.